Ready to forward.
Yeah. You run up.
No, who's the first?
Not a great
I tried to reach it, so I. Or scares, you know.
Because they are.
Nice to see that first name. I'm a pro.
I don't know.
Thank you. Matter fast, our roll and cast fast.
Okay. Being as it is 1:00, I'd like to convene the regular meeting of the Fire and Police Retirement Board. Tracy, can I get a roll call?
Jonathan Musk,
Here.
Lawrence French,
Here.
Robert Beckwith,
Here.
Lynn Bennett.
Here.
You. First meeting of the day, are you joining the Pledge of Allegiance? Pledge allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Just for the record, I'm trying to get logged on, so present, as soon as I get logged on, I'll be on.
Perfect.
Taking a while.
Yeah, I think Tyler's having issues too, so maybe.
Yeah. Haven't been able to log on.
Okay,
Let me just specific. Okay.
Okay, so moving to the agenda, Fire and Police, can I get a motion to approve the minutes of June 23rd? French will make that motion.
Beckwith second.
All in favor? Aye.
Aye.
And with.
Do we have-
Yeah, the roll
do we have
call.
to- Do we have to roll call it?
Yeah, I think we changed, did I hear that differently? Russ?
Pardon me?
I'm sorry. I'm a little confused on the roll call when someone's, that's what we've done in the past, but I'm remembering maybe that you gave an update on.
No, only for disability.
Oh, okay.
It doesn't apply to Lynn's situation, so there is a requirement for roll call.
I understand. Okay, so I'll take a roll call to, I have a first and a second on the minutes, and I'll roll call vote. Larry?
Yes.
Rob?
Aye.
Lynn?
Aye.
And with my vote, it passed unanimously. We'll move to approving today's agenda for July 23rd, 2026. Can I entertain that motion, please?
Beckwith will make the motion.
French will second. Roll call. Lynn?
Aye.
Larry? Aye. And Rob?
Aye.
And with my vote, the agenda passes unanimously. We'll move to time scheduled hearings, 1:00 to conduct swearing in. Jonathan Luss, certified as qualified candidate for fire member of the City of Fresno Fire and Police Department Board.
Last, please raise your right hand. I state your name.
Jonathan Luss,
Do solemnly swear or affirm
do solemnly swear to affirm
that I will support and defend the Constitution of the United States
I will support and defend the Constitution of the United States
and the Constitution of the State of California
and the Constitution of the State of California
against all enemies, foreign and domestic.
against all enemies, foreign and domestic.
That I will bear true faith and allegiance to the Constitution of the United States
And I will bear truth, faith, and allegiance to the United States,
and the Constitution
and the Constitution
of the State of California.
and the Constitution of the State of California.
That I take this obligation freely
I take this obligation freely
without any mental reservation or purpose of evasion.
without any mental reservation or purpose of evasion.
And that I will well and faithfully discharge the duties upon which I'm about to enter.
And I will well and faithfully discharge the duties I'm about to enter. Yeah.
Sign the paper.
Okay, thank you. Okay. I need a couple seconds, that was more than I thought. Moving to time schedule 2, conduct election for chair and vice chair of the Fire and Police Department. That you rest.
Again, nominations are now in order with respect to the Fire and Police Board for the position of the chair. Nominations are now open. Are there any nominations for the position?
So, Mr. Chair, I have a quick question. I know it's later on in the agenda, it talks about, it's in an informational item, the elected member for police that's in the agenda. I'm curious on the timeline of that. If I'm not mistaken, I think it still follows the timeline of if there was an election, even though there was only one member. And I think so is that person not going to be sworn in until September? Is that correct?
I'm sorry, you're talking about the rank and file police member?
Correct. But what the elected member that will replace Chris Cooper.
I don't have information on that. Perhaps Mr. Feller does.
Yes.
That will be September 9th.
Yes, sir.
I'm going to propose, and I don't know if this is possible, but I'm going to propose that we just kind of stay, if we can, as is, and we do our elections when we have a full board, since that's going to be a little over a month or so.
First, the joint board rules requires that there be an election of the positions at this meeting. And also you need a chair to conduct the board's business. You can always add to the agenda at the appropriate time additional elections if you want to reconsider. For example, you could elect the incumbent chair to be the chair, and then elect one of the three of you to be vice chair, and then have that reconsidered if you want when you have a full board.
No, I just thought we'd wait for the full board, but it sounds like we have to move forward today. So
Yes.
Okay, well, with that in mind, then I'd like to nominate Trustee French for the chair position.
Are there any other nominations for the position of chair?
Yes, I'd like to nominate Jonathan Lusk.
Are there any other nominations for the position of chair? Not hearing any. Nominations are closed. Since we have two candidates, we will have to have a vote. So let's proceed to the vote. All the votes in favor of board member French indicate.
Aye.
One vote in favor of board member French. Now let's turn to the other candidate, board member Lusk. How many votes are there in favor of board member Lusk to continue as chair? I see
Aye.
one vote. I
And
see
Lynn.
two votes. I note that one board member hasn't voted.
I didn't know I could vote for myself. I didn't think that would be appropriate.
Well, yes, you can vote for yourself.
Okay.
Do you want to cast a vote?
I will cast a vote for the incumbent for trustee.
Okay, the vote has occurred, and by a vote of 3-1, Chair Lusk, the incumbent chair, has been continued in his position for another term. So now, congratulations, Chair Lusk.
Thank you. Thank you.
Now there's the position of vice chair. Nominations are now open for that position. Are there any nominations?
I'd like to nominate Lynn.
So board member Bennett has been nominated. Are there any other nominations for the position of vice chair?
Well, I'd like to nominate French again.
So there are two nominations for the position of vice chair. Are there any other nominations?
Russ, I would just, I accept the nomination, but I want to be transparent in the fact that I probably will be on Zoom for maybe 4 meetings a year since, and so I just want to make sure everybody's aware of that before the voting starts, if that's appropriate to bring it up at this time.
Yes, it is. And thank you very much for that information. Let's now proceed. I think I said nominations are closed. If I didn't, I'll say it now. Nominations are closed. Let's proceed to a vote. how many votes are in favor of Board Member Bennett for the position of Vice Chair? 1, 2, Ms. Bennett.
Yes.
So there's 3 votes in favor of Board Member Bennett to serve as Vice Chair. How many votes are there for Board Member French?
I'll withdraw my nomination and register my vote for Lance.
Thank you. Given that state of affairs, I, as your election officer, announced that Board Member Bennett has been elected as Vice Chair of the Fire and Police Retirement Board.
Congratulations, Lynn.
Thank you.
Okay, we'll move to consent calendar. Anything to pull and discuss? If not, can I entertain a motion to approve the consent calendar?
I'll make the motion.
French will second. I have a first and a second. Lynn?
Aye.
Third? Aye. Rob? Aye. And with my vote, the consent calendar passes unanimously, and that will approve a number of service retirements and a couple of disabilities as well. Is Alan?
He is here.
Okay. Alan, is that you?
Yes.
Congratulations, sir. Your disability retirement has been approved. And I like to share the same thing. May you take more money out of the pension than you put in and enjoy yourself. Take care of yourself and be healthy. Congratulations. The floor is yours if you'd like to say anything, or Rob, if you got anything.
Just like to just thank the board for their approval. I think it was a right decision and just decision. Seeing all the paperwork you folks had to go through was just insurmountable. It's just like, I don't know how you guys do that. That's just so much paperwork, and I think you came to a great decision on this. I appreciate it very much.
Thank you for your service to the city. Congratulations, sir.
Al, on behalf of the police department and the community, thank you for your service. You were a staple in that police department. Everybody misses you, and can't say enough for what you did for the community and the department. So thank you.
Thank you for the kind words.
God bless you in your retirement.
Thank you.
And do we have, I guess, Jeff Wynn? He's
When retirement,
Wynn on our side, and
we have a disability.
yeah, and then the other disability is number 4 on Joella.
Champagne Garcia is on.
Is she on? Hey, Joella, this is Jonathan. Are you there?
I'm here.
Hi, Joella.
Hi.
Congratulations. Your disability has been approved.
Thank you, my friend.
Yeah. You go way back to one of the first men at the drill tower. You've been a friend and a colleague, and appreciate you, and may you enjoy your retirement and take out more than you put in.
Thank you, my friend, and thank you to the board. Appreciate you.
Larry's here as well, French.
Hey,
I just
Larry.
want to, hey, Joella, I just want to wish you many years of happy, healthy, and safe retirement. Thanks for all that you do.
Thank you.
Okay. Then we'll move down to do you have anything else you'd like to say, Joella? The floor is yours if you decide to say goodbye.
No goodbyes, just lots of thanks to everybody for your assistance, and have an amazing week.
Yeah. God bless you.
Was there any of the other service retirements on there from the police department? Tim Tejan?
Yeah. That's why you don't know if there's anybody else that's here. You recognize anybody here online or anything?
I'm not still trying to log in.
Oh, I'm sorry. Yeah. Shauna Schaefer or Timothy Teachin, George Wilson, James Young. They're all got it. And they're not on the audience, then we're online, then we will move to agenda item B, no disability hearings, no staff initiated items. We have a board initiated item D1 to approve resolution establishing the annual net effective interest rate for the drop program.
Alberto and Kathleen have been hard at work on that, so I'd love to let them talk about it.
Only imagine.
Yes, well, before you is the retirement administrative certification of the annual rate for fiscal year 2027. Yes,
Should point out that it did change from the original.
It changed from the original report that we attached to the board agenda when it was finalized on Monday, due to recalculations of some of the information from our private market manager. So the rate we determined for fire and police less than 3%, which is used to achieve cost neutrality. The gross rate was 285, and the nominal annual interest rate applied to drop accounts for fire and police will be 2.82% for fiscal year 2027, commencing first. Questions? Happy to answer them.
So the change is very,
Slightly, it was 280. Previously, the fiscal year return went from 1244 to 1254 with the additional information that we gathered yesterday. And so the net rate went from 280 to 282.
Mr. Chair, I do have a few questions, but of course, you want to go first, go ahead.
The only question I have, this takes a 5-year average, right?
Your average.
So that number in 2022, that negative number is -7%. We anticipate next year that falls off and we're
Yes.
hoping for a much better return for
It
our
should,
members.
as long as the fiscal year 27 rate is good, then we should have a fairly decent 5-year average. This year, we dropped off a 30-year plus percentage. So that's why you can see we dropped off a 30%.
Yes.
As part of our, what remained was a 7% negative. And while the year was good with 1254, it's not enough to replace a 30% return for the 6th year that dropped off.
That's occurred 2 of my questions, and you only asked 1, and I actually answered 2, so that was good.
Months.
Well, they weren't very good questions. So the first thing I wanted to ask, and this is just for my own knowledge, so I looked at last year's the spreadsheet, and 2025, a few of the numbers are different.
Yes.
And I'm just curious why. I know it's a very small
Yes.
change, but I'm
It
curious
is.
why.
And it's because right now we are really working on the very best estimates that we could possibly have for fiscal year end June 30th. Data does not get finalized by our custodian bank until August, and we don't go through the audit until really October.
Okay.
So with our finally auditor, we finalize all the numbers, and so they do change very, very slightly, but not enough to really move the needle as far as what percentage is allocated to the drop account.
That makes sense.
But it's a fraction of a percentage usually.
Makes sense. Thank you for
You're
that.
welcome.
And then just for my own knowledge or maybe historical purpose, is this little over 2%, is this the lowest that we've seen? Have we seen it lower than that?
I think you might we can put together a history and share that with you. I think we might have been into the one. Probably in the 190 or something. It could very well be the lowest, but it also could not. But it would be very close. This is pretty
If
good.
you could, that would be
We'll give you the history.
no rush on that. I'm just more curious than anything.
Sure. And
And
there's
then-
been some really great years. but,
Yeah, well, clearly a 30% that one.
98.
Yeah. And then the last question I have, just because I know that this question will get asked a lot,
Sure.
does the current dispute with the city factor into these numbers?
No,
Okay,
I would say no.
that's
It's really the actual fiscal year returns for the 5-year period and our actual investment expenses that have anything to do with the calculation for the drop rate is applied to active drop.
thank you. I thought so, but I just wanted to.
And when
make sure.
people retire, they get the assumed rate of return.
Perfect. Thank you. Very well explained.
You're welcome.
Thank you, Kathleen, as well. Go ahead. Perfect. Yeah, thank you.
Lynn, anything?
What's that?
Do you have any questions?
No, thank you for asking.
we could just.
Of course.
We actually found that in 2010 and 2011, we had some lower rates applied to the drop accounts, both for employees and fire and police. Had nothing to do with the reduction because of the drop not being cost neutral for fire and police, but the rates of return applied were 130 for 2010 and 198 for 2011. Those are the lowest, though again in 2013, we did 2.01 in 2013. You know, that was during the financial crisis, and we had quite a drop in our total balance at that point through those years, even though we had some
Right.
fairly decent returns.
Just to be clear, like, and following up on his question, if things were to stay static, which we know they won't, but if they were, and with 2022 dropping off, we're confident that next fiscal year will look much different on a better side.
There's no guarantees on investment returns. So we cannot,
I said if they stayed static, right? Which we know they won't. I'm just saying, looking through, trying to be positive here.
Yeah, it's hard to say how much the needle can be moved because you take off 22, which was negative, but you add, and it depends on whether we're above our assumed rate of return and how far we're above our assumed rate of return, because even the average with a pretty good year, it's not a huge return on the 5-year average. It's 736 this year. That's fairly, low in comparison to other really good years. So,
and the last thing I'll comment, I'm glad we're putting in the context 2022, because when somebody looks at this and doesn't understand that, the first thing they see is that our investment returns were actually higher in 26 than they were in 25. And our costs were slightly lower.
Right.
So for the layperson, that wouldn't equate to what we're seeing, but but when we're factoring in the 5 years, so okay. I've said enough. I appreciate it though, because I
the
think
biggest thing to point out is that 30% return.
yes, because as you can expect, I think it will. There'll be a lot of questions, so I just wanted to make sure that we got that on.
Yes, if there's no further discussion or questions, can I entertain a motion to adopt the attached resolution establishing the annual net effective drop interest rate for fiscal year 2027?
Beck will make that motion.
French will second. Roll call, Lynn?
Aye.
Larry?
Aye.
And with my vote, that passes unanimously.
Thank you.
Going to general discussion, the status update on my appeal. There's no update. The dates are still set for September 22nd to 24th. We have one information only item. We do have an elected police member.
And he'll start on the August 12th meeting. The candidate was Stephen Jacobson. Pursuant to Section 13, Article 6 of the Rules Regulations, City of Fresno Retirement Board. I certified that only one candidate qualified for placement on the ballot for the election of police member of the Fire and Police Retirement Board.
Perfect. Are there any proposed agenda items for the next board meeting? Hearing none. Any unscheduled oral communication? Hearing none. Any member of the public wish to comment on fire and police? Okay.
Computer's working now, though.
There are no employee personnel issues. We do not have anything for closed session, and fire and police is adjourned. Floor please.
I call it order the way.
Yeah, speak up. The employee side of session.
Make a motion to approve minutes.
Motion to roll call. Yeah, roll call.
Boom. We get a roll call for the employee side.
Tyler Kamalani,
Here.
Caleb Newfeld,
Here.
Raquel French. Here. Lisa Pinto. Here. Alfredo Molina.
Here. Get approval of the minutes for the meeting of June 10th.
I'll make a motion to approve the minutes, Marvell.
Second that motion.
We have a first and a second. All those in favor?
Aye.
Aye.
I'll need to abstain.
No, 4 ayes and 1 abstention. Motion passes. We approve the agenda for today's meeting.
Motion to approve, Marvell.
Second. We have a motion and a second. All those in favor?
Aye.
Aye. Motion passes. The agenda is approved. Now we need to conduct the swearing in of Tyler Kamalani, an elected manual worker member of the Employees Retirement Board.
Please raise your right hand. I state your name.
I, Tyler Kamalani,
Do solemnly swear or affirm
do solemnly swear or affirm
that I will support and defend the Constitution of the United States,
that I will support and defend the Constitution of the United States
and the Constitution of the State of California
and the Constitution of the State of California
against all enemies, foreign and domestic,
against all enemies, foreign and domestic,
that I will bear true faith and allegiance to the Constitution of the United States
that I will bear true faith and allegiance to the Constitution of the United States
and the Constitution of the State of California,
and the Constitution of the State of California,
that I take this obligation freely
and I take this obligation freely
without any mental reservation or purpose of evasion,
without any mental reservation or purpose of evasion,
and that I will well and faithfully discharge the duties on which I'm about to enter.
that I will well and faithfully
Discharge the
discharge
duties
the duties
upon which I'm about to enter.
upon which I'm about to enter.
Is Corey and Jess's awning in? Might want to check it for him because I see that wind's kicking up.
Oh, then you need to mute.
It's the six.
Congratulations.
For the employee side, now we need to conduct an election for the chair and the vice chair for the retirement boards.
We'll start with the election for chair of the Employees Retirement Board. I'll act as the election officer. Nominations are now open for the position of chair.
I'll nominate Caleb.
And I will nominate Tyler.
Are there any other nominations for the position of chair? Hearing none, nominations are closed. We'll now move to the election for the position of chair. Let's move first to candidate Neufeld. How many votes are in favor of candidate Neufeld as for the position of chair?
Aye.
I see 2 votes. I'm sorry, was there a third vote?
Sorry, we're just 2 votes for them, 3 for negative.
So now let's move to the other candidate, board member Kamalani. How many votes are there for board member Kamalani?
Aye.
3. I announce as election officer that the majority of votes were cast for board member Kamalani and that he therefore continues as chair of the Employees Retirement Board. Now let's move to the position of vice chair. Nominations are now open for that position.
I'll nominate Caleb.
I'll nominate Alfredo Molina.
Are there any other nominations for the position of vice chair? Hearing none, nominations are now closed. We'll proceed to a vote. How many votes are there in favor of board member Neufeld for the position of vice chair?
Aye.
I hear 2 votes.
Aye.
I'm sorry, 3 votes. How many votes are there for board member Molina for the position of vice chair?
Aye.
I see 2 votes. Based on that vote, majority of board members have voted for board member Neufeld to serve as vice chair. That is the ruling of your election officer.
Congratulations to the both of you.
Okay. Moving on to consent calendar.
I'll make a motion to approve the consent calendar, Marvell.
Thank you. I'll second. We have a first and a second. All those in favor to approve the consent calendar? Aye. Aye. It passes unanimously. And then, up the drop. Yep. Those are the people that service retired. I think she's in the audience. So, we have, okay, great. We have some, people on the service retirement, sites. Hired. And there's a couple of names I recognize and just want to give a shout out to Patty Linko. Thank you for your service and pleasure to have you, being part of the family here at Fresno, retirement. And also to, Zawa, congratulations, Lisa. And, may you both take more out of the retirement system extending his lines than you ever put in. Thank you. Moving on to, Deborah Gibson. Deborah Gibson here.
Yes.
Oh.
I want to thank you. You don't know how much this means to me. I loved my job. I did it to the best of my ability, and I just got hurt so many times. And I really appreciate what you've done for me. Thank you so much.
On behalf of the staff and everybody who actually did all the work, very welcome.
Thank you.
Operator, anything like that?
Yeah, if I may, Deborah, it was really nice working beside you. I remember when I first started, I was new and I was out there for the first time on my own as a fresh new bus driver. There's something that happens when you get caught by your follower because you're so far behind, because you're so slammed. And I remember it was actually Deborah that caught me for the first time, and she got out of her bus and she greeted me very warmly and told me that it was okay. And all the pressure just went away. And she also told me that she was my union rep. And if there was anything that I needed, she would be there for me. So thank you for keeping true to that. And I appreciate your service to the city.
Thank you.
Yes, Deborah, we hope that you too take more out than you put in. Moving on to no disability hearings. Staff initiated items. Any? No, board initiated items. Number one, we have the new resolution establishing annual net effective interest rate for the deferred retirement option program drop for the retirement.
Yes, before you is the retirement administrator's certification of the annual net drop interest rate calculation for fiscal year 27. The gross rate is determined to be 5.85 and a nominal rate of 5.70 will be compounded monthly and applied to the active drop accounts during the fiscal year 27, commencing on July 1st. So attached is the resolution. It's your approval.
We have a motion to approve.
I'll make that motion.
Second motion. We have a motion and a second. All those in favor?
Can I say before we,
Carmel.
can I just say before we vote, I just wanted to, acknowledge the Q&A that took place on the fire and police sides with member Beckwith and Member French, and they answered the questions that I had. So I just wanted to put that on the record. Thank you.
Yeah, I agree. That's definitely me too. So moving on, again, back to the vote. Aye. It passes unanimously. Thank you. Moving on, general discussion. Only item. Proposed agenda items for the next board meeting. Non-scheduled oral communications. Public comments. No issues. And we will close this session. Adjourned. Now we're moving on to the joint board meeting. We'll get a roll call for the joint board meeting.
Bonnie,
Here.
Newfeld,
Here.
Marvel French, here, Ruza Pinto, here, Alfredo Molina,
Here.
Jonathan Musk,
Here.
Lawrence French,
Here.
Robert Beckwith,
Here.
Lynn Bennick.
Here.
We get a motion to approve minutes of today's meeting. I'm sorry, June 23rd meeting.
Make that motion.
Second, Marvell.
First and a second. All those in favor? Aye. And it passes unanimously on the employee side. Fire and police, same motion.
I will make a motion. French will second.
Roll call, Lynn.
Aye.
Larry.
Aye.
Rob.
Aye.
And with my vote, the minutes pass unanimously. And on the employee side, can we get a motion to approve today's agenda?
I'll make that motion, Marvell.
Also,
First and second, all those in favor?
Aye.
Aye. Motion passes unanimously. Fire and police, same motion, to approve today's agenda.
French will make that motion.
I put second.
Roll call, Lynn.
Aye.
Larry. Aye. Rob.
Aye.
And with my vote, our agenda passes unanimously. And if there's no time scheduled hearings or matters, moving on to the consent calendar. Make a motion to approve the consent calendar.
I'll make that motion, Marvell.
I'll second. First and second. Are there any questions?
Yeah,
pulled item.
you're gonna ask for pulled item?
Yeah, I want to pull the travel report. I think it's item number 3. Number 2.
Number 2. You and accept annual travel report this time. Thanks.
I had 2 questions just from my own knowledge. One, I know this report is done annually. I believe in board policy. I think it's board policy section 2-01-A. Says if there's more than 4, or if a board member travels to more than 4 or attends more than 4 conferences, that it needs to be an information only item. So my question here would be, would this report substantiate that requirement as well, or does that need to be a standalone information item?
It used to be a standalone information item. The board direction we received over the past several years was this was fine. If you'd like us to go back to every single month doing that information item, we're happy to do that.
Nope, I was just curious on that piece. My second question.
Can I ask a follow-up on that before you move to your second question? What is the language of the actual policy? Does the policy state that the board would approve it in advance or in arrears, or is it silent to the timing?
I would have to look up that language exactly.
Well, I'd like to know that. I would expect for you to know that too, Rob, but if you don't, maybe we can bring this conversation back so you have the opportunity to look that up. Take action on this one item. Yeah, separately. Is that okay?
I think that's, yes.
Absolutely.
My other question on this piece was looking at the board education conference. I know based off of the other board policy, which is section 2-01-B, there's a list of pre-approved conferences that we can attend. And I noticed one of the conferences I did not see on that list, and I don't recall that being brought to the board for approval. It was and I could be not reading it correctly, so I want to just kind of get confirmation, but it would be NEPC 2026 Public Funds Workshop. Was that a pre-approved conference, or did that get approval outside of?
I don't believe it's on the pre-approved list, no.
Okay, so I don't recall that one coming to the board for approval. So I just want to call that out on the record. And I understand, attending conferences is important, right? We need to have the knowledge to do our job successfully and to be good future stewards. But I would like to consider adding some guardrails moving forward. I think there is some excessive spending with some conferences that we have one board member attend. It was over $50,000. So I would propose that moving forward, we look at creating guardrails so we can tighten that up and make sure that we're utilizing our funds correctly. Not that we're not doing that not correctly right now, but being good stewards of the funds that we have moving forward. I think that's a bit excessive. And again, I do know that conferences are important to attend, but I think there needs to be a limit. And once we go beyond that limit, there needs to be board approval to move forward on that. So just wanted to call that out. Yeah.
Historically, we did a monthly report. Historically, we did bring all those items to the board generally for pre-approval. Over time, it was directed to staff to not bother.
Yeah.
So again, we're happy to change it back. We're happy to do whatever you'd like. If you'd like to propose different guardrails, language, et cetera, may I propose that you form an ad hoc committee so that we can get some draft language and staff is not just shooting in the dark on what you might like.
You know, I'm open to creating an ad hoc committee, and I'd like to take the lead on that piece. Yeah, that'd be.
Well, he actually takes the lead.
Yeah,
on
okay.
that. I don't know if you have that authority, according to the rules.
Yeah, understand.
Well, so to your first question, what would you? Go ahead, Ron.
This would be a joint board policy, so.
Right. Yeah, so were you just asking for information on what happened
Well, I think-
last time?
I mean, how do you that's a lot of money that was spent on one board member for travel. It's like $50,000.
To one conference?
Multiple conferences. So I think we need to create guardrails to limit the number of conferences that we attend.
Multiple conferences over what time period?
1 year.
One year. Fair.
Historically, conferences, when proposed, have not been turned down. So I think that predating, so I don't know if you
Yeah, I'm referring to.
Oh, you're saying.
Yeah, of course.
Yeah. Not that it's.
Yeah, that's it. But it's,
Yeah.
if you want to stick to the rules, we can certainly stick to the rules. But if, again, what Rob said, the history of it was just every time we asked, it was an approved thing. So it was something that wasn't on any ill intent on my part. When you say excessive, I think every bit of every conference that I've learned has taught me the skills that I need to be here and refreshes my memory. So what I do here is very important. And I'm not excessively doing anything, in my opinion.
I understand. I know. Talking to an outside person, if they see a dollar amount that's excessive, 50,000.
Yeah,
Right? How
and
how would
you can take up an outside number and look at a lot of things that are excessive, but in context.
Well,
For the amount of education that I have coming into this role
Mhm.
and the constant need to stay on top of things, I find it very valuable. It isn't excessive to me. As a matter of fact, it takes a lot of time away from my time and family. So to say that I'm excessively abusing something and that it's ridiculously overpriced and we need to put guardrails on,
I'm not saying I'm not saying you're using it. I'm saying I think,
Right.
with the
I
current.
think it's just the tone of it. It was like 50,000 to one member. I thought,
I think it's more than 50,000. That would be generous, but
right, well,
yeah.
well, regardless, I'd just like to chime in. It raised a red flag with you, which is good. That's why we're here. To hear that everything. And that thing is good. The education is valuable, in my opinion. I've seen some colleges, they'll charge 20,000 a year. Some will charge 200,000. Basically, same books, same instruction. I personally would like to see us go back. I don't know if we start this today or to go back to board approval rather than creating an ad hoc committee to start changing things. Seems like
I think we should just start and do
And
board
the-
approval going forward. I don't think we have to
just
go
board
back and
approval.
change anything because we basically
Right.
instructed that we didn't have to see every little item.
I'm okay with that. Yeah, I mean, I think the concern, what if I went to travel every week, right? To go to
Yeah.
conferences and I've racked up a couple $100,000 and there's nothing in the current policy that would prohibit that from happening. And I want to make sure that we have guardrails in place.
So would this just be for conferences or trainings as well?
Conferences and trainings, I think they're under the same,
Yeah, you're just
Same
looking at the
category.
overall.
Yeah.
I would also throw in the due diligence trips as well. To me, that one stood out as being expensive. I'm not saying excessive or abuse or anything like that. It just was expensive. And I attended a due diligence training as well, one several years ago. So I also want to make sure we're following the policy, which is
Right.
but the nature of my question earlier. But I
I just got back from training this week, actually today.
Uh-huh.
And that's a training I wish I went to right when I got here.
Yeah.
So there's some trainings I think that maybe we can
Which one
discuss.
did you get back from?
SCARs. Just your responsibilities. Exactly, sorry.
Yeah, super important. Like the Wharton School, that was very amazing.
Yeah.
You go back and you're trying to educate all your new trustees. That's really important to have all that
Right.
available.
But for me, the Sackers, just after being there, very valuable, I felt. And I also felt like that would be really valuable to walk into for the first thing.
Yeah. When you first started.
Yeah.
Yeah.
First started. And that first year I was a little hesitant to go to training. I had to go to training, but I'm also managing with my workload at work. So there'll be some years I can tell you for myself where I can go to more trainings in a given year and conferences. And then the year before, the year after, you hardly see me go to any. So it also, I just hate to limit something to a year scope or to look at it in that view only, rather than the view of how long you're on the board.
Yeah.
Because there'll be some years where your job's going to afford you to go and be a part of these things, pick up more knowledge. And some years where, probably won't be.
So you have new
Because of
baby
staffing.
for instance.
Right. Yeah. You got babies at home, you got, moms moving
God,
in.
family stuff.
Yes.
Yeah, no, I understand.
Life's happening.
Yeah. I don't want to kind of,
Yeah.
point the attention on John.
I just don't think we need to do an ad hoc committee.
No, I'm
I just
I'm
would
sorry.
like to go back to what they said it was before.
Yeah, and I'm okay with doing
That
we
makes sure
do
everybody thought
approvals each time, it's fine, and yeah, I'm okay with that.
I'd be supportive of that too. Keely, did you have another question or were those?
I have one more question. I wanted to.
Because I have a
see
comment
if
too,
we
Tyler.
could, on the report, it's a great report, thank you guys, but if we could also include the dates for all the conference travel for our board members, that'd also be very helpful. You guys do the same thing for staff, but if you do that for the board members, all that great. That's it.
Okay.
So I have,
Yes, sir.
before we leave that direction, that was direction from ERS. Does fire and police request the same change back to the old standards? As in reporting them every month if they occur?
I'm in big support of following every rule we have, and if we're not being compliant, it's really easy to get right back into governance.
Again, the previous direction we got was the annual report satisfy everything. So we're happy to go back to ad hoc as needed. We just need to make sure we get the same direction.
I'm with Taylor. I don't think we need an ad hoc. We just need to go back to.
We'll go.
Go with the policy.
If it goes over forward, let the board know and get it approved.
Do we need a
You would
motion
bring
for
the
that?
policies back.
I don't think so.
To make that direction.
And make sure that all conference travel is pre-approved on that list, if not, take that to the board for approval. Yeah, so.
Okay, so I got the direction from both, I believe.
I do. I have a couple of comments. The first one was actually covered with Caleb's last question regarding or request regarding the timing. I'd love to see all of the reports presented with the same information. So if we're going to have dates and whatnot, I would prefer that actually to have more information on each, and for whatever reason, the board members is not like that. And then my other concern, which of course, I always very, very supportive of the board's actions as a whole, and will advocate for, my opinion, but then also be very supportive of whatever the actions are. But I do think that from a fiduciary perspective, if each one of the 10 of us did over $50,000 of travel and training every year, that'd be over $500,000. And to me, that just sounds like that's a lot for the outside looking in. I realize that there's going to be some ebbs and flows on availability and even just ability to be that focused on the travel at certain times of the year, or maybe depending on the responsibilities of your job or responsibilities of your home or whatever it might be. In any event, I am interested in, and the other boards that I serve on actually do have limits in their policies for board member travel. And whether that be a dollar amount or the frequency or the number of days that we are away, given that we do have, not our community members, now, certainly those of us who are employed by the city do have other other responsibilities as well. So I am interested in that kind of as Caleb put it, a guardrail. But again, if the rest of the board is not interested in that, I also am willing to just move on.
I could see going to something like that. I think if I thought there was an abuse.
Oh, I know it's an abuse and I'm not involved.
No, yeah, I don't think you were. I'm just saying that's why I'm not there yet for whatever educators call me part of that. Again, I just think.
Fireplace side of things. I don't know if you guys are recap the policy. As far as I know it, is that there's a pre-approved list. You can attend up to 4, and if you go over 4, you get board permission to go above 4. I think that's appropriate. And if it's too much excessive that you feel excessive, you can say, I think it's, vote no. Like I said, for me, I don't use it for anything other than vital stuff that I take back and use on a daily, weekly, and monthly basis, holding this position.
Yeah, I mean, I don't think anybody's questioning the value of the conferences or the trainings. I'm certainly in support of following policy. If the board isn't interested in re-examining that policy or changing it, then we should at least support what we had.
Yeah, and like I said, there's a lot of
bring it back. I think that's the right thing to do, the safe thing to do, is follow policy. I do appreciate Ruthie's comments because I think she's right. I mean, when you look at just in terms of dollar amount, I'll just give you a brief example. You know, I have 5 patrol districts that I'm responsible for, that I manage, the police department. And each one of those gets $5,000 a year for 60 plus employees to try to go to training. So when they, you know, if they were to see something like that. No, I'm not comparing the importance, but I'm just putting it in perspective. It's a lot of money. And I certainly hope that 10 of us don't, reach those amounts. But yeah, that would be something. So having said that, I think my position would be whatever the board's desire is as far as the policy, we follow it. And I change it, we change it. If we don't, then we should follow what we have.
And there's, again, lots of policies as you read the policies that are outdated, we're not following, and we got a lot of cleanup and governance to do in the weeks and months and year going forward. So it's not just this policy that we're not following. I think there's a lot that are need to be refreshed.
To agree with that comment, sir? I'd like to disagree with that comment.
Okay, I shouldn't say things. There are, as I review it, I should say there are, not that we're not following a lot, there are a number of policies that seem to be outdated. I mean, that need to be refreshed.
But they're also workable. And they're also
Yeah. Maybe I overstated the.
Sorry, yes, but
I overstated that. They're just our policies and joint board rules could use a refresh for sure.
And we're trying to bring those to you on a monthly basis, et cetera, trying to get that refresh done.
So I personally don't think we need an ad hoc. I think we just need to follow policy that if a board member goes past 4, they bring it to the board for approval. That's the policy, I think, as it sits now, right?
So we will change historical direction back to as originally applied. We will get you a vote memo to each board as applicable, going forward on a monthly basis as needed.
Sounds good.
Can I just ask a question? When was the last time we revisited this policy and updated it? Does anybody know?
This year.
Few months ago.
Just May.
Beginning of the year.
May. It was in May you adopted the final changes to these policies.
Yeah,
It was in May.
more to do with travel, right? Travel,
Yeah, it's both.
It's all together, sir.
It's all together.
Oh, that's right. It was recent. I remember now. Okay, thank you.
So again, just to recap for my understanding and for the record, so we are going, the direction is to follow the policy, which is for conferences and pre-approval for anything that is not on the pre-approved list. Is that correct?
For both items, yes.
Okay, very good. I'm satisfied with that.
Me too. My clarity, we are not. So if I went to 4, after the four, that's when it would be brought to the board.
Yes, sir.
To be approved.
This trustee's about to go to the fifth one within a year's period.
Yes, sir.
One more question. I think the policy does say information only item though. So would you approve information only item or that need to?
Actually, the policy does not state that the approval is pre-approved.
Yeah, it just needs to be.
States now that if a board member attends more than 4 conferences in a fiscal year, such attendance shall be noted and reported to the board as an informational item.
There's no vote then.
Correct.
Okay.
That changed to an informational only item 6, 7 years ago.
Okay.
7, 8 years ago, because getting a vote was, I don't want to say pointless, but it was pulling teeth. So literally it changed to an informational only item 7, 8 years ago. Kathleen, somewhere in there.
I can't. I'll say one. A few years ago.
So again, we will change staff's understanding of board's intent, report it ad hoc as needed for both of those items.
I just say one thing, Vice Chair Newfeld, you pulled out the NEPC Public Fund Conference. Section 21A H6, my conference is sponsored by investment consultant of CFERS, would be classified as that.
Okay, cool.
So they have an annual conference in Boston usually, then they have their public funds conference, which is specifically for pension fund clients in Tempe every February. So,
All right.
sure.
Okay, so the discussion, looking for a motion to approve the consent calendar.
I made the motion to approve it already,
So
so.
motion.
But we, I guess with this, we pulled one item, did we?
Well, I think I'll probably go.
That's full for discussion.
Second motion.
The travel.
You did second.
Yeah, so he's not here now.
Let's do over.
Yeah, so I'm looking the chair over, so we'll make the
I'll
motion
make the
again.
motion.
Just a point of order, since we pulled an item and had discussion on it separately, should we be voting on that item separately?
Look for a motion to approve number 2, the review and accept the travel report fiscal year 2026.
I'll make that motion as long as an information only item at our next meeting, we can get it revised with the dates, but I'll make the motion to approve it as it is, knowing that information is coming forward.
I'll second that motion.
Here we have a first and a second. All those in favor?
Aye.
Aye. Motion passes unanimously.
We need to approve
The rest of the consent calendar still needs approved as well.
Yes, thank you.
I did not hear the vote. I heard the motion, I heard the second.
We need to do motion second.
Right,
I'll make the motion to approve the balance of the consent calendar.
thank you.
I'll second that motion.
All right, we have a first and a second to approve the remainder of the consent calendar. All those in favor?
Aye.
Aye, and it passes unanimously.
Thank you very much.
Byron, please, to approve the consent calendar.
I'll make the motion.
Bench will second.
Roll call, Lynn.
Aye.
Larry? Aye. Rob? Aye. And with my vote, the consent calendar on joint passes unanimously.
Staff initiated items. Total fund review.
Thank you, Mr. Chair. Good afternoon, everybody. Here to talk about May. Unfortunately, it's a little out of date because it's almost 2 months old. However, the market's rebounded quite nicely. Fund generated a 3% return, which is great. Kathleen and Alberto let the cat out of the bag for the fiscal year return already, which was quite nice, actually higher than last year's fiscal year return. So the important thing is our long-term relative return still is very strong, but more importantly, also above our assumed rate of 6 3/4. So May though, energy and oil markets kind of calmed down a bit after the kerfuffle in March and April in the Middle East. Oil fell quite a bit. As you remember, it jumped well over $100 a barrel. Unfortunately, today it kind of retraced and went back over that marker. So more volatility to be expected, more uncertainty to be expected, but that's what the three of us hopefully will navigate on everybody's behalf as best as possible. Ceasefire declared, ceasefire undeclared, ceasefire declared, ceasefire undeclared. Hormuz is still closed, I think. I didn't check it a few minutes ago, but that's the best of my knowledge that it was open for a few minutes and then it closed up again. On the factor side, momentum, no surprise, exceptionally strong is really driving a lot of the performance. Size in this regard, meaning small caps, so very, very small market companies versus large mega caps. You might think of them as the Mag 7s. Retreated a little bit. They fell out of favor to some degree. The mega cap Mag 7 names, AI names came back into favor. That's still kind of continued now. Although in a more recent update and perspective, with the earnings calls going on right now as we speak over the last week or so, especially with the hyperscaler names, the spending levels that they suggesting and moving forward with are giving Wall Street some concern. So it will be interesting to see how it plays out over the coming quarters and the rest of the year, calendar year, whether or not those come to fruition, but also they have to think about cost of capital. So interest rates at the start of the year were expected to have one or two reductions. Right now, we're kind of standing still and potentially a couple increases by the end of the year. So it'll be interesting to see how things play out, especially as the new Fed chair, Kevin Warsh, was just sworn in, and see how the Fed policymakers and decision makers move forward with all the data that they have available to them. On the inflation side, like I said, still high. I know I sound like a broken record, and I apologize for that, but that's just kind of where we are. Well above the 2% target, the PCE, as I've talked about many times, up over 6%. So that's significantly higher than it should be. Inflation, headline inflation is up over 4, and then 4, which is headline, if you take out food and energy because no one needs to eat or travel or do anything, just under 3%. So still quite high, and this is why a lot of market observers and participants and clients are thinking that rate increases are hikes are expected. Although our public fixed income managers feel the same way. The probability of rate hikes is quite high. Probability of recession, though, still relatively muted. So, any questions on the overall market or the fund? Okay. So, not to harp on inflation too much, but on the lower left-hand corner, I know. On the lower left-hand corner, the graph shows the blue line and the red line, a large spike, April, May, and June, or April or May, all exclusively because of what's going on with Iran and the energy markets. So as you can see, it was pretty calm and steady and maybe even slightly coming down, but it doesn't take much to spook investors and have results change very quickly. The total fund, 0.7, almost 4.8 billion. So very well, as you can see on the bottom, the fund continues to increase quite nicely, and it was pretty much flat by the end of June. We still remain quite a bit overweight in certain parts of the portfolio. We're actively working to bring those up with all the searches that we have recommended, that you have thankfully approved. Will take time for that money to get in the ground. However, we're constantly looking at that, thinking of ways to rebalance the portfolio in a meaningful way that doesn't disrupt the asset allocation and composition too much. Like I said, long-term relative returns still in the green, 3, 5, and 10 are above the benchmark, which is great. But even, like I said, even more importantly, it's above the assumed rate. So it reduces pressure on everybody, members and sponsors to find extra money. So a lot of our peers are underwater, unfortunately, and so they still have to constantly find money to get up to a fully funded status. Our risk continues to decrease, about 6.5. That's on a time-weighted basis with Northern Trust with just line items. It's kind of an awkward view of the portfolio because the private markets are not properly risk metrics associated with them. But when you look at the other columns, such as the slowest risk, around 8, still not too bad, but a much truer representation of where our risk lies. And it really should be no surprise that equity is by and far our largest risk factor, and it will always be our largest risk factor. There's just no way around it. So, but other than that, our tracking error, which is our active risk on the bottom of the page, continues to come down. So we're just over 1% tracking error. For those of you that forgot, or just want a refresher, it's the volatility of excess returns. So that's what it's capturing over a 3-year period. So if I looked at this on a monthly period over multiple years, it would look different. So, but this is the rolling 3-year. We had just over $11 million in capital calls, which is good. We rebalanced about $40 million out of BlackRock to fund benefits and other capital calls, and just to kind of re-add that cushion to the cash portfolio. So infrastructure, I believe we will have one item next month to bring to you. Private credit, we have had some conversations over the last month, and we have another item in a few minutes on our private credit portfolio. Real estate, I think we're kind of done there. And we were very active at the beginning of the year, committed well over $100 million to various managers, and they are working through the legal and ODD process as we speak. So we are keeping Kathleen and Alberto very busy, flying all over the world. I think they like it, but sometimes I don't think they do so much. But you know, we've had a very busy year, and we think all of these selections will pay off over long. Bailey Gifford's still on watch. We're actually going on a trip next week to meet with some managers that will potentially act as a complement to them, since they are struggling mightily. I just had my quarterly call with them yesterday. So they're very acutely aware of their performance shortcomings. But we think this is going to be a good idea to find a complementary manager and balance out some of their very specific portfolio construction processes. That's it. Just any questions? All right.
Goodbye. Okay.
Except,
I do have a question. Chad, you said June fell flat? So that was May predominantly. In June, flat.
June was roughly flat. So the return, the fiscal year to date return in May was just over 12%. The fiscal year return over 12%.
But that still means most public equities for those 3 months were up 15% or more. So overall, it's fine. Yeah, just in June.
Okay. Jack, moving on to
Yes.
B2. Got some possible action to adjust portfolio guidelines. Rural and
Yes.
very small.
Hold on 1 second. All right. So a couple months ago, one and only Dan Hennessy from NEPC gave an overview to all of you about our private credit portfolio. So that is our non-publicly traded fixed income. So we have two SMAs, Monroe, US,
Separately managed accounts.
separately managed accounts, where we have far greater discretion over the portfolio construction process. They still have security selection, oversight, and authority versus a commingled fund, which is where we committed X amount of dollars and we're just in the fund and they have total control over everything on how the portfolio is constructed and shaped with a lot of other investors. So we have SMAs or separate accounts with Monroe, a US direct lending manager. We've been invested with Monroe for a decade in their traditional commingled private direct lending funds. And in Europe with Arcon, lending as well across mostly Western Europe and some Nordics. So Dan made the recommendation, or his report offered the suggestion to enhance the return and provide some more flexibility within private credit because it's overly conservative with a large concentration and large exposure to direct lending. So what this agenda item hopefully conveys is that we have two managers that we have very high conviction in, that we've had relationships with, that have complementary strategies to their existing direct lending strategies that we're already invested in. And we would like to provide them some flexibility up to 20% of our separate account to invest in these complementary strategies. So that's really the gist of it. Monroe actually has a small piece separate account already invested in these. The guidelines approved that and gave them that flexibility. Arcmont does not. So the idea is to leg in. So we wanted to make a follow-on contribution with both of them. 25 million for Monroe, since they already have some of their non-direct lending assets in our portfolio, and 35 million to Arcmont because they do not, trying to keep things as symmetrical and even as possible. So we are hoping to leg in or ramp up 10% over this year and next year to get to that 20% total. Both of them are very excited about the idea. Both of them feel like they can do it very easily and quickly based on whenever we give them the go signal. So,
but we don't want them to do it quickly. We want them to do it nice and smoothly across a little bit of time.
Sure. But that is really the meat and potatoes of this. We feel like it would be great. It would allow us to get some quicker diversification into our private credit portfolio instead of, waiting for these new funds that we've met with and talked to and committed to get up and running. So it would start diversifying the portfolio a little bit and adding some extra return that the pure direct lending assets provide.
Our research team knows both of these managers as well as due diligence, both of these strategies. One of them, the Arcmont strategy, has already been placed on our focused placement list. Monroe's has not yet been placed on that list. It has to go through additional number of steps before it goes in front of our committee, but our research team has a lot of confidence in it. We think both of these organizations have really exceptional investment teams. The direct lending that they're doing for you now is sort of the most senior and secured types of debt, offering a higher yield than what you usually get in public markets, but a lower yield than the kinds of loans that these sub-strategies will be making on your behalf if you approve this. So it's a smaller portion of each SMA because we think that there should be smaller allocations to these riskier strategies relative to direct lending. I'm not saying direct lending is always going to be like every direct lending strategy is safe. They also have defaults that they deal with along the way. But overall, it's sort of a high single-digit return. Actually, I think Arcmont's consistently had some low double-digit returns. So we think these are great strategies that will be additive, and putting it through your SMA structure gives you more flexibility.
We've had many conversations with both firms about these respective strategies as well. So it's not just like a, hey, what do you have? This is something that they brought to our attention. We've asked them about. So there's been a collaborative back and forth, just trying to, over many years, understanding what these strategies actually entail and encompass.
And like Chad said, there are other strategies online. They're just going to be a while before they come in all again. So this would give us a chance to diversify a little more quickly. In a positive way.
Question?
I'll make a motion.
Second the motion.
We have a motion and a second on the employee side. All those in favor?
Aye.
Aye. Motion passes unanimously.
Fire and police, same motion.
I'll make the motion.
French will second. Sorry. Thank you. Roll call. Lynn?
Aye.
Larry? Aye. Rob? Aye. And with my vote, the motion passes unanimously. Thank you, guys.
Thank you.
Solid work. We're on statute initiated items. Number 3, notification of co-investments.
Okay. This is the last item for me for a little while. Don't worry.
We love you, Chad. Keep going.
Oh, 11 makes one of us. Thank you, Trustee Beckwith. So the co-investment policy, we actually have a meaty agenda item in just a few minutes on this. However, we were presented not 1, not 2, not 3, but actually 4 co-investments over the span of about a month in May and June. So the 4th one is still a work in progress. It's not completed yet, which is why it's not. However, we have 3 that are approved or that we completed. So per the policy, we're bringing this to your attention and to share some of it. Historically, I actually provided the actual names for the assets or the managers. And after a conversation with one of our peers down south, thought it would probably be a better idea to anonymize this just for privacy and confidentiality reasons. However, we have 2 with Asia Alts and 1 with Volta. All 3 are private equity. Volta is our venture capital manager who invests in battery and energy storage capabilities globally. And Asia Alts, if you don't remember, there are Pan Asia equity PE fund of fund that was just hired a year and a half ago. So we spent 5 or 6 years talking with. So Volta, we committed $7.5 million to this deal. That is inclusive of the expense commitment, which was 3%. So our actual capital that we plan on investing is about $7.28 million. So small amount of fees. There are small management fees and small carried interest associated with this, which can happen at times. Venture capital, I think it's a little more common versus traditional buyout funds, which are much larger and bulk, have larger asset pools. So Volta is only about a $200 million fund. So anyways, Project Autonomous, as we named it, very interesting company that has really focused on autonomous equipment, and hybrid electric equipment that is for agriculture purposes, logistics, and defense, kind of like small drones and helicopter type machinery. Very interesting. They're here, a California company, so not too far from here. They have extremely strong and knowledgeable management team. These guys have multi-decades in engineering, AI, and technology. They they do some interesting things. I don't really know what to share with you that can be discussed in open session. So that's why I'm trying to be very careful with my words. However, we committed $20 million with Volta. This does not move the needle within private equity all that much, since Pantheon, our core fund-of-fund manager, is the bulk of our private equity exposure. But the company that this investment, this co-investment opportunity is offering, very unique company that expects to do some strong things, and they feel like there's two exit paths. One is through IPO, or one is through a sale to a strategic, and maybe the parts are greater than the sum outcome, where they can split off agriculture and they can split off defense, so they can maybe generate a higher exit price. Are there any questions?
I don't know, please. If they go IPO, does that change our relationship with the fund or our investment relationship?
No.
Still private.
It would potentially speed the return on capital because it would provide an opportunity.
Same generation.
Yeah. The reason we selected Volta as an investment is because of that team's great capabilities in batteries and energy storage, but also a long history of helping firms commercialize products that they've developed but haven't yet ramped up. We saw this as it was covering all of those areas. And so, like anything in venture capital realm, there's no guarantees. But we thought this was one of the important things, as you'll hear when we talk about co-investments, is making sure that you're investing in areas that are sort of the sweet spot for the manager's skill set.
That was actually part of their whole reason for being. They literally started with Department of Energy, and then were split off. And that was what they developed out of. So that's all that they focus on.
Yeah. Okay, next one. So the next two are with Asia Alts. So these ones are slightly different. The Volta one actually applies to our co-investment policy. And I know it sounds strange to hear that. After the three of us discussed and meeting with Melissa at Asia Alts, we believe that these specific Asia Alts ones will not apply to the co-investment policy that we're going to discuss shortly. So if you don't remember, quick refresher, we committed $150 million in total to Asia Alternatives. $100 million was in their traditional commingled vehicles through an SMA, a separate account. $50 million was dedicated to co-investments. So these two co-investments will be put into that co-investment sleeve of the portfolio. They will not be traditional co-investments like Volta one that we just went over is. We thought we came to this conclusion because, and we can talk about it more later, if we have co-investments for Asia Alts competing with co-investments with our other managers, we will never get to that $50 million threshold, and that's over a 3 to 4 year period. So the entire point of co-investments is to get diversification, get insights with the deal teams and the managers, but also lower our fees and expenses. So, but again, we can discuss more later, but I just wanted to give that backdrop for these two. So we were actually presented 4 co-investments from Asia Alts within like 3 weeks. And we had to get on the phone with Melissa and say, that's a little too much. Is this standard or what? Because she was super excited and really ready to go to send us co-investments. And that's actually why when we came to you in March to update the co-investment policy, it was spurred from conversations we had with her months ago. So the first one we're calling Project Concerto. It's South Korean small mid tech buyout space that is really leaning into the AI tailwinds and revolution and everything. So South Korea hopefully is not too surprising, outside of China, is the second largest export market in Asia, and nearly all of it is in tech-related industries. So this fund and the team that runs this fund, Project Concerto, extremely knowledgeable. As you can see, they all have been educated at some of our best schools in the country. Some of the OSU is not included, but we got MIT, Stanford, and Berkeley, just to name a few.
That is one of the negatives we're talking.
With that said, they are a control type manager, that meaning when they make investments in other companies, they want to have these 50 majority or full control to help really implement the changes and incentivize an exit, a strong exit. So these two co-investments with Asia Alts are the no fee, no carry, which are the more traditional type of co-investment structure. So no management fee associated with it, no carried interest or performance fee associated with it. So, and this is where I talk about, sorry, whoops.
You're looking, yeah, maybe now it's a good time to point out that Dan did vote to call this project K-pop.
I got very excited about secret code names. He's in charge, not me.
So the firm overview is where I kind of go in briefly about how the Asia Alts portfolio, how we think about it conceptually. This is how Melissa thought about it when she was suggesting it to us. The reason we did this was just to, get a fee break, because $100 million gave us a fee break, one, and then 50 million for co-investments to, again, lower fees. So our blended rate is much lower than whatever the headline rate is that most people pay. However, the Korean company, extremely interesting, which is helpful because it will help diversify our PE exposure, because we just have a lot of our Asian portfolio in Australia, Japan, India. So having some extra commitments to South Korea will be beneficial. From what I was able to gather, we have about 20 basis points total in South Korea. So this will bring that up quite a bit. And then as the Asia Alts portfolio, commits and invests over time, that will increase as well. So, but we wanted to be fair with all of them. So they actually, all three co-investments that we're talking about today will have different risks associated with it. With the first one with Volta, was, can that company actually scale? So they're a fairly lean company, and, growing and scaling is really the key that any kind of venture outfit tries to achieve. Whether or not that happens, that's something that we'll keep an eye on. Volta will definitely keep an eye on. For this Project Concerto in Korea, same thing. Can they continue scaling and expanding? Korean mid-cap companies are kind of few and far between. You have the mega caps, everybody knows. We've got Samsung, and the new flavor of the month, SK Hynix, which is part of the AI revolution. Their stock price went up about 300% last calendar year. So we all missed the boat on that one. Even our equity managers, which is very frustrating. So, but again, these are, this is a tough environment, but these guys have found a way to sort of succeed and persevere. So it'll be interesting to see if that happens. And then also with it only being focused on South Korea, that economy starts to wobble. Will this be impacted as well? So, but Asia Alts, for those of you that remember, Melissa is extremely transparent, very talkative, very nice, shares a lot of information. So they're really on the ball. We we'll have quarterly calls with them about not only portfolio, but these co-investments as well over time. We can share updates as necessary. And then lastly, this one, probably my favorite name, Project Wombat. It's a very localized firm in Australia, New Zealand, with a hint of Japan mixed in as well. Again, small mid-tech buyout. So that's going to be the overwhelming majority of a lot of co-investments are going to be buyout focused. So you have a fund trying to buy other companies, put them together, then sell them off at some point down the road, either as one platform or individually if that's what the market deems as appropriate. But this one is slightly different. So they're focusing on SaaS or software as a service. So slightly different than just buy and build and then throw out. But this is extremely AI specific, AI intensive, and a very skilled management team. Though the CEO for this particular company is, or this particular manager is kind of rough around the edges. I guess would be the nicest way to put it. And so the biggest risk that we actually have identified based on the information that we have available is, can the founder really develop and retain a management team that will stick around for long term? So they've cycled through a few and then rebuilt a team with some younger, hungrier staff members that really understand AI and really want to dive into AI. So this should hopefully be a nice complement to the process.
A rough around the edges, he means he's very enthusiastic. He's very intense. He drives himself, 16, 18 hours a day type of thing. And he expects all of his team to do the same. So there's been a little attrition over time. People want to capitalize on their money and actually go take a bloody vacation. So instead of living, breathing, and working 7 days a week like he does, there a lot of the older people wanted to just cash in and go away. But like Chad said, they now have a younger team who's very enthusiastic as well. So yeah, the CEO is very driven, very intense.
Sure. So, this was more of a, I don't want to say an information item, but it's just part of the policy that we bring to your attention once one is completed. So this is actually the first co-investments we've made in 2 years. So just an FYI, they come around often enough, but sometimes there's a gap. So, but I have reached out to our managers over time and just say, hey, remember us. We'd like to participate in these when they come up. So.
Thank you.
Okay.
Moving on to number 4. Going to retirement systems, trust fund budgets, retirement office administrative budget, and the deferred compensation budget for fiscal year 2027.
So Kathleen and Alberto presented the draft of this a while back. More final version is approved. So given that.
Let Alberto give you a summary or answer questions.
So before you is our full proposed annual budget for fiscal year 2027. As Rob mentioned, much of the values are the same as what we presented back in May. A few items that we did update as far as our operating budget related to the expenses related to custody, investment expenses, securities lending, foreign income tax, and foreign exchange. Once we updated our projections for fiscal year 2027, we adjusted the budget request for fiscal year 2027 and lowered it down a bit. We also updated the budgeted item for cyber and fiduciary liability insurance in accordance with the approved premium, recently approved premiums. As far as our budget that was approved by the city, Those numbers are essentially the same as what we provided back in May. There was like a slight change in an internal interdepartmental charge related to information systems. As I mentioned back in May, we did request an additional retirement benefit manager, but that request was not approved in our overall city approved budget. So staffing level will remain the same for fiscal year 27.
That's 6 vacancies. No, I counted, including the
EGCIO.
Yeah.
I think some of those are already, I think one of those. There's 2 that we're going to keep making as part of the attrition, attrition. And I think the others, I think, are either in the process or might have already been filled.
So the other 4 are being filled. Is that what I'm hearing?
3, because then there's one that you can't.
Right. The one that I know the one that we still being worked, but the other 3 are being filled or in the process of being filled.
Yeah, 3 are in process, 1 is frozen at the city level.
That's a DCIO.
That's the DCIO.
But here are the other 3 are moving forward. All right.
I've been reading through this and I'm on page 1 where it says organizational structure. Didn't you change my position to retired instead of, if I've been retired since the end of 2020. And say retired and basically I was an executive vice president / market president. I got 50 years of banking behind me, but just for, I don't think I'm working at the biz up here at Valley Bank now. The life, it looks good.
You don't want to unretire?
No, I rehire. Yes, I go to a doctor. She says I was rehired because I didn't want to be retired. No, I'm good. I've been a director and whatever. I'm good.
See your printout, Marvel, because I noticed a formatting situation on my computer, and I just don't know if that's just how it came across or it's on the page that Rob signed.
I'm just, I don't know.
Yeah, it's on the printout as well. If you'll notice, it looks like there's a little hitch in that get along there on the top of that. So change that.
Yeah.
Okay.
Plus on the PDF thing of the
Yeah.
Yeah, the budget message is up.
Yeah.
Yeah, on the PDF thing, I don't know what happened there.
Sometimes that stuff happens, yeah. Can I ask a couple of questions or? I wanted to address, well, actually, maybe this would be better if I just ask this. When were the projections, the estimates for the current year, when were those made? Because it seems like there might be a timing difference between a couple of things that I would have expected to see.
When we were submitted them or?
Yeah, when were the projections where you did sitting? No, submit, excuse me, calculated and put in your document.
For this one or for the original one? For this one?
Yeah, for this,
that was done
the year-end estimates.
2 weeks ago, early this month.
Late July?
Yeah.
The reason why I'm asking is because I'm trying to find the page for board travel. The total for fire and police is listed as a year-end estimate at $27,200. But the travel, not including the reimbursement to the city for the time, just for one board member that was on our travel report was over 30,000. So that didn't jive to me. Maybe there's some expenses that are included in a different line item. Where it says retirement.
Yes.
I'm sorry. Go ahead.
So it's 20. Oh, right. So some of they're talking about the reimbursement for board time or
No, where it says on page, it's actually on page 31. under administrative expenses for fire and police, it says board member education and conferences, 27,200.
Okay.
But on the travel report that we just talked about, that was on the consent calendar, but pulled, taken separate action. The travel and the education and conferences, including the reimbursement to the city for the time, was over $30,000. So I'm just curious, maybe it's a timing difference, or maybe some of the expenses are in a different line item, which is really what the heart of my question is should there be other components?
Yes, because some of it would be under due diligence, and then there's the board travel. So there's due diligence, travel, and then there's board education and conference.
So even when it's a board member for due diligence, that's put in the due diligence line item. I think I'd like to see that separated out in the future. I don't think we need to change it for this year's budget, but if we can make a note of that for the future, I think that would.
So where does the stipend go that we've been talking about?
That goes back on the city approved budget. It's paid through the
Internal service.
Yeah, it won't see on that, but
I'm just curious to see if it was in one of the totals.
I think I get it. So you're saying like for fiscal year the 28 next time you want to see maybe some of the line items that would be board member due diligence and then another separate. Okay.
Kind of how you have the retirement staff education and conference separated out from the board member education conference. I'd like to see the same thing for due diligence.
Okay.
Believe it or not, that was my question.
Motion to approve.
Sure, I'm finished.
I'll second that motion.
A motion and a second. All those in favor?
Aye.
Aye. Unanimous.
All right, same motion, first by Becky, second by French. Roll call, Ben,
Aye.
Larry, aye, Rob, aye, and with my vote, it passes unanimously. Oh. Second motion. I thought I saw it. Now.
Okay. Moving on to B, board initiated items. One ad hoc committee, legal services recommendation. Alphonse Johnson, resignation from position of general counsel. 10/31/2026, discuss some possible action. So, we had an ad hoc committee. And, we had an RFP sent out. So we had 2 responses. And there was a Saltzman, Rex, and an announcement asking those 2 responded, and they were interviewed. And the recommendation from the ad hoc committee is that we move on to Nossman. And that.
I'm happy to leave the room if the board wants to talk about this without Nossman present. It's up to the board, but.
Well, it's a public meeting, but
I'm okay.
Whatever.
What do you feel? Anything?
It's a general practice when we're speaking on. So
We
sorry.
should excuse them.
Yes, I agree with Marva.
It's as a general practice.
To excuse them.
To excuse yourself, yeah. That's yes.
Thank you.
That's my practice. So.
Thank you.
It being a public meeting, I don't know but I'm okay.
And we have received a resignation from.
Right, you have that short letter from me, and I just want to, I've submitted, firm and I have decided to withdraw from serving as the board's general counsel. We propose an effective date of the end of October to allow transition. We do that in the context of noting the wonderful firm that the ad hoc committee is selecting, and our association with that firm, I think, is totally supportive of the decision of the ad hoc committee, and we would join in the ad hoc committee's recommendation to both boards. I think they they will do a marvelous job for you. I just want to say personally that I thank both boards very much for having allowed me to serve them for so many years. It's been a wonderful experience for me. I have enjoyed working with the current board members, board composition, and the wonderful individuals who served on this board previously. I've also been very lucky to have served with wonderful staff people over all these years. So I have been very privileged, and I am eternally grateful for that. And I am also feel that the boards are moving on to a firm that will provide wonderful legal services to them. I hope the boards will approve and a continuation of my role here through the end of October, with the primary reason for that to allow an effective transition of knowledge and projects and all the rest between my firm and the successor firm. So thank you very much.
You, Russ.
Can I ask a question?
Sure.
How long have you, Russ, or your firm been serving the retirement boards?
Since approximately October 1990.
1990. It's a long time.
It's a long time.
Yeah.
36 years.
It's my entire working career. Well, I just, for one, want to say that I appreciate you very much. I appreciate this you're coming forward at this time in this manner. It just speaks to the level of professionalism that you not only have demonstrated over the past 36 years, but your continued professionalism now. And I know I've only been on this board for about 4 years, but had the pleasure of working with you since about 2005 and on another board. And I will just say I really appreciate your advice and contributions and your integrity in particular. And I just want to say thank you.
Thank you.
I say thank you also. I've been here since 2000. And so Russ has been here the whole time through some of the transitions when Stan was here and then Rob came and everything and all the different board members. It's been a pleasure the whole time to work with you, honestly. And I thank you for your many contributions.
And I'll second those comments as well. I appreciate all the work you've done for the board, and it's been great to know you the last year and a half. So I wish you luck.
Yes, definitely.
Guess we have to allow.
Yeah.
Told Russ this, but yes, not enough good things out. Not enough good words in the language to say about you.
My turn. I think that it was a tough decision, and we deliberated quite a bit. I've learned quite a bit and enjoyed working and serving alongside you. Anybody else?
So we're all.
Yeah.
Yeah, I guess.
I didn't know we were doing it, but just get that way. And it's going to be hard to outshine them what they said.
Yeah, it is. It is. And for my very short period of time on the board, Russ, you've always been educational in not only giving us legal advice and direction. Sometimes we may not be know that's what we're doing, but I really appreciate the depth of education you provided. At least for the first thing.
I feel like everybody's waiting to hear if I'm going to say anything controversial, and I'm actually not. I will say I'm surprised. I just a little disappointed, but because I have only been here a little over a year, and most of all, I've just appreciated the just how candid you are, and like Ruby said, integrity means everything to me, and if nothing else, in a short time, that's what I've seen out of you, Russ. And this is tough, but we as a board have placed our trust in an ad hoc committee, and they made a decision, and I think we have to, as a board, have to support that, but it doesn't mean I have to like it. So best wishes to you and the firm, Russ, and hopefully we cross paths again.
I'll still be with you for 3 more meetings.
So Russ, I just have one question about the transition though. There's no conflict or anything with that, with Ashley's firm?
Conflict?
Working with the lawsuit and all that stuff. Yeah.
Working with
Lawsuit.
the law. Oh, I see. Serving. No. often in many other situations, the law for other California retirement boards, the system's general counsel also operates or serves as the litigation counsel.
Okay.
And though Ashley can go into this probably in a better fashion than I do, it'd be slightly different. For example, if matters that I advised you on ended in litigation, memos, there's oral comments in closed session, then there might be some difficulties in my firm representing the boards, either as a plaintiff for a defendant. But that's not what the situation is here.
That's fine. I just want to make sure you clarified it for us before she came back. I think they're great firms.
Yeah, the decision wasn't, I'm sure it wasn't made easily or lightly.
Oh, no, I'm sure.
It was tough.
No, I trust that.
Yeah.
But if any of the board members who weren't on the ad hoc committee wants to review at least the printed submission by the firm, I think you'll be very, very impressed.
So, I guess we're moving on to the motion to accept Rob's resignation. And he'll work with us. Not Rob, I'm sorry. Wes. One of the hard guys. You almost voted on that.
No, it was only a spot.
Yeah, accept the rest of his firm's resignation. To also accept the ad hoc committee's recommendation to hire on Nosson. Do I have a motion?
I'll make that motion.
I'll second.
I have a person second. All those in favor, say aye.
Aye.
Aye. Motion passes on the employee side unanimously. Aaron, please.
I'll make the motion.
I'll second it.
Roll call then.
Aye.
Robert's ayes. And with my vote, it passes unanimously.
So, thank you for that. May I?
Can we, I'm for the record. But, all right now? Yes, thank you, Rob.
Seek board direction to negotiate amendment to the existing contract with Nosson.
Motion required. Just direction. Okay. I think that's the logic next step, right?
Yes.
Direction taken. Thank you.
Congratulations.
Thank you.
Actually, and thank you again, Russ.
Yes. Moving on board initiative items number 2, discuss some possible action on co-investment program.
Okay. So Dan and I are going to tag team this one. I thought it would be helpful to give some background and history to the program and policy itself. A couple months ago, legal counsel suggested or asked, can this program survive if Rob left? Meaning just myself, Dan, because this was proposed back in March, and at the time Rob was leaving in July. So that's not the case right now. It's not the case as far as I can tell. So with that said, the co-investment program and policy was put into place because when I started here 9.5 years ago, within the first 6 months, we had several managers offer us co-investments because our legal documents are side letters that fully negotiates on our behalf, includes language to offer us co-investments if the manager has them. So while we had that ability, we did not have a policy. So we had to decline that every time. So after about the 6th or 7th time we had to decline, I talked to Rob and Don Strachey, Dan's predecessor. Like, if we have this language, why don't we think about it? Because, the common knowledge is that what we've already discussed, they are with high conviction managers and they lower they lower fees. They, Freudian slip. They increase returns and lower rates. So there was some back and forth, and it took a while for Rob and Don to get on board. So about 5 years ago, I proposed at the board offsite, like, you don't have this, after Rob and Don finally came around to it and we're open to the idea. So I proposed it at the board offsite, and then I drafted a formal policy and got it approved back in August of 2021. So again, five years. So that's the history of how it started and why it started. So over time, the original policy was a little more restrictive. It was a minimum of 2 years, no matter what, for any kind of manager that we invested with. The amounts that we were allowed were smaller. So right now it's 40 basis points per deal, which equates to $18 to $20 million, depending on what the total fund is like on a given day. Originally, it was 25 basis points. So there was less opportunity, but it also gave us a chance to get our feet wet. So just to get everybody comfortable with the process and everybody understood what it meant. But the more important thing was that it provided staff and NPC some flexibility, because most co-investments very short timeline. So they require anywhere from 1 to 2 weeks or a few months. It really depends on the manager and how generous and flexible they are. So back then we had 2 meetings per month. Now we only have one. So
What's the other one's?
So this needed in November and May. Anyways. So the timeline was very short. So we needed to establish a governance process and procedures. So this policy actually spelled everything out quite nicely and succinctly, I believe, in that manner. So we're not taking large bets. We are not, just committing, $50 million at a time. This has very tight controls. It has a rigorous review process between the three of us, conversations with the manager, deep dive with manager on the specific asset or fund or whatever it may be. And it is developed over time and evolved over time into what it is today, which I think is a pretty good document. In fact, the last time it was reviewed and updated a couple months ago in March was to clarify something that Asia Alts brought to our attention, because Asia Alts thought it was the anniversary because they're a separate account, and the current language allows for separate accounts 1 year grace period before we consider co-investments. So Melissa took that to mean 1 year from the time we committed and signed the legal docs, and that was not our understanding or interpretation of the document. And so I cleaned up the language to state 1 year after the initial capital call that was investment related. So sometimes we get capital calls for just paying fees because they're paid in advance versus arrears. And we don't want to pay fees for a couple quarters. That starts the clock for co-investments. We wanted some actual money in the ground with the manager. The other thing too is the managers that we have on our roster, we like them a lot. There's a reason we select them. There's a reason we bring them for approval and recommendation. These are high conviction managers. A lot of them we've been with for 5, 7, 10 years. So we know their strategies pretty well. We rely on NEPC to do some extra digging if we don't have that capability. So there's a lot of back and forth, a lot of collaboration, camaraderie between the three of us on these managers and what co-investments mean and do they make sense with that manager. We have a lot of managers that have never been offered one. We probably wouldn't because their conviction is just has been lost over time. So with the managers that we come and notify you about are the managers that we really like and we feel like great long-term partners, fiduciaries for our assets. So with that said, I wanted to pass it over to Dan to kind of give an overview of what co-investments really are, go into a deep dive on that. I just wanted to provide a background on how it started, why it started, and that the three of us, even if we're all left, two of us are still very capable of implementing and completely, prospering in the program itself.
You. So I pulled together some information about co-investments in general and then specifics about the City of Fresno program. This was forward-thinking work on the part of your investment staff. The majority of California public pension plans do not have co-investment policies to this extent and therefore aren't executing on co-investments, which could be a detriment to them. If it's a well-executed plan, it's a great way to lower your manager fees and therefore potentially increase your returns. So here's the overview. What is co-investments? So you're a limited partner in these private market funds. The general partner is doing deals, individual purchases of assets, and a co-investment is when they go to their limited partners and offer them the opportunity to invest alongside the fund, either with zero fees or in some cases with much lower fees than the standard part of the fund. As Chad mentioned earlier, it's very common to co-invest in buyout funds, private equity buyout funds for no fees, whereas in venture capital or in real estate, it's more common to do much lower fees. So in both cases, it gives you an advantage. Yes.
Are the fees lowered or are they shared?
So think of it this way. So private equity fund is buying a company for $100. Maybe they will go to the debt markets, like a direct lending manager, and borrow $50 of that $100. So they have to put $50 up in equity. But maybe $50 is more than what they normally invest in a strategy. Maybe this deal is a little bit larger and they only want to do 30. So they need to find someone else to put up equity for that additional $20. And in the case of a co-investment, this plan is putting up an additional some part of that 20, all of it or part of it. So you're investing alongside with the fund. You're becoming a direct owner in this company as well as a partial owner through your investment with the fund.
Thank you.
So it reduces fees. It obviously, because of the required due diligence, improves your visibility into the types of investments that are being done and has the potential, assuming that those deals that you do co-invest with perform well, to enhance overall funds returns. So the key is let's make sure that we have a good process in place to help maximize our chance of doing the good deals and overall to do it quickly enough that it doesn't slow down the speed that the private equity manager needs in order to close on the deal. So if someone is foot dragging along the way, they would not be a good co-investment partner, these managers. A lot of news about how co-investments are becoming more important. And we actually have some survey information from Goldman Sachs, which asked a lot of institutional investors, what are the most important things? What is much more important for your private market manager valuation this year than last year? And the only thing that was listed more important than co-investment opportunities is overall fees and terms, which are obviously very, very important. Since co-investments often are helping you lower your fees, it's all natural. You'll also see that statistically, all of these things are more important to larger plans. But in each case, smaller, medium, larger, the rank order is the same. So there are subsets, no matter what plan size, that are thinking about co-investments because the potential to get private equity-like returns or private market-like returns, we're also doing it in some other asset classes, without fees or with much lower fees is great. Why are co-investments being offered more? Chart on the left shows that the cost to borrow money for private equity deals has gone up. And the chart on the right shows as a result, the amount of money that is being paid for these new private equity deals with equity has also gone up. They're using less leverage. They're putting in more equity. And so perhaps more equity than their initial plan would have been for that fund or for their fund size. This chart shows how this is the total amount of capital raised in private equity and how it ramped up to its peak in 2021 and then it dropped. That final chart, 2025, is only the first half of 2025, but still we're still raising private equity money below the levels that we were at just a few years ago. Therefore, there's a potential for more opportunities outside of these funds that they've raised as co-investments. This chart shows the amount of money being redeemed from private capital versus the amount of money being reinvested. Even with a slowdown in new deals, there's been an even sharper slowdown in money coming back to managers. So again, there's a number of reasons for that. A lot of it is because interest rates are higher, which has had follow-on effects to some private equity managers and venture capital managers determining that some investments they've made, in retrospect, they paid too much. And so if they were to sell now, they would get less money than they want. And so for they're holding on to these strategies longer. To be uncharitable, it's called extending and pretending. That's a bad sign for some past investments, but it isn't indicative of the future. Sometimes these tough periods create an attractive time to make new investments. Globally, co-investment funds have also increased quite a bit. Again, that 2026 is just the first quarter, so it's a little too soon to determine where we are going to play out for this year. But there's been a lot of capital raised. Fund count increase while the last couple of years, while the capital raised increased, the number of funds decreased. So you're getting the bigger players are getting bigger, but still the amount of capital being raised for co-investments is growing. So why do general partners, fund managers offer co-investments? I've got 6 good reasons to offer them and 3 bad reasons you have to watch out for as you're looking at co-investments. So a colleague of mine, by the way, borrowed this and used it elsewhere and thought red was too inflammatory, so they changed the color. But like these are bad things, so let's call them out as I see them. The good reasons for them to be offering co-investments is that the deal is attractive, but it's a little too large for their fund. Having this additional capital in place for a co-investment might help them cinch the deal. Another option would be to bring in another general partner, but that's a competitor. And it might also be someone that has a different vision for where the company is going. So that makes that a less appealing source of additional capital. It also helps them build strong relationships with their investors in the hopes that these relationships can continue for longer. And then there's a lot of investors, limited partners, LPs, who are asking for these co-investments. So they're answering. The things to watch out for. GPs offering co-investments on their lower conviction ideas. That would be bad. That's what we have to, part of what we gauge is what is their conviction in this manager and in this investment. They may go out of their strike zone for the larger deals that aren't what they're good at. That again, increases the chance of something going poorly. And then finally, they're having trouble fundraising, which could speak to all sorts of things going on about them. And this is sort of an extra carrot that they're offering. So again, a lot of this is evaluating not just the deal, but also, more importantly, evaluating the manager and the manager's skill set relative to the deal. All the reasons to do it. No fee, no carry. Because there's less fees, it helps you avoid that J curve where you're losing money in the initial years of a private equity investment. It's an efficient capital deployment, better relationships, additional exposure with those high conviction general partners. And you can be thoughtful about where you're making allocations. So,
sorry, confused looks. Do you mind if I take it on J curve?
Yes, please.
Sorry. So a couple of confused looks. So J curve is a fancy way of saying you commit to this and you give them money to start with. but there's going to be expenses. There's not going to be a return on capital. So they float around. You typically see a return that's negative for a few months, a few years before you start getting a return on capital. So graphically, it forms a J. So investors are not very original. That's what we stick with. It's a J curve effect. So this mitigates that by having their no fee, no carry, and a much faster actual investment collapses that. So you see a much more positive return more quickly.
Rob or Dan, is that primarily due to the carry time and cost associated therewith, or is it the J curve, or is it due to the life cycle of the businesses, if you will, that we're investing in?
It's the third. Yeah. It's the lack of fees, because what's causing that J curve up front is typically you're paying fees, but you're not seeing appreciation. They buy a company, but they don't start marking it up until they start realizing the value of it over time.
It's not normal. I'm used to your normal one.
Yes. And the final one, portfolio construction levers. If you're investing with a manager you have really high conviction in, but you have highest conviction in certain areas, it helps you concentrate that. Part of our work with Asia Alternatives is to think about they're investing all the way across Asia with all types of different assets. Where are the areas that they've demonstrated the most success, that they have the highest conviction in, and it allows us to lean into those areas. They're trying to build a well-balanced portfolio, and we want it to be even more balanced in certain ways. This is one potential way to do that. Title. This is a survey that a manager did in 2024, looking at how often did co-investments perform better on these two metrics than the funds themselves. So on the left, net TVPI, total value versus the purchase price. Think of it as all the money that's come back on a deal, and then how the deal is being held, and how does that compare to the amount of money you put in whenever you put it in. 61% of the time, co-investments have a higher multiple on investment than the fund that they were made in. So more often than not, it's outperformance. And then on the right, loss ratio. On average, for every 4 investments, the private equity managers that they were evaluating for this massive survey, for every 4 times a private equity manager had a loss-making investment, the co-investments were 25% less likely to be loss-making on an individual basis. So the deals tended to have a higher return and were less likely to lose money. It's a weird way to draw the metric.
But if I remember right, this also was against the entire universe.
Yes.
Not high conviction managers that we're trying to focus on, which lowers the ratios even more.
That's what we're trying to do. So, example of the fees. If a typical private equity fund is charging 2 and 20, a 2% flat rate fee, and then 20% of carried interest once they outperform. Usually there's a hurdle, but 2 and 20 in general. And then you're doing co-investments at 0 and 0. The ratio you invest in lowers the fees. So that's a primary driver of this whole thing. And that's one of the major reasons why we're trying to do this, is to get our fees down. This is an example of how quickly we need to move. In some cases, every deal is different, but we have to move fast. And so we have to have a solid, defensible, and efficient approach to evaluating these, because we have less time to do diligence than we do an open-ended investment, an entirely new fund. It's not always 4 weeks. It can be longer. I think we've often seen it longer. So what are we doing? This is why we're doing it. And then this chart are the risks. Avoiding that adverse selection, recognizing that the opportunities might be lumpy, having a couple of years before we approve one, and suddenly we have 3 that we approve. So you never know when they'll be coming in and when the good ones will be coming in. You need to have the liquidity available to do it. And you have to recognize that you're not going to be right every time, but you're trying to increase the possibility. So let's turn from that overall overview to talking about specifics, where I tried to sort of build some charts and some descriptions based on
the policy that was developed and then updated, and then just the experience that we've had over the last several years.
Yeah, before you move on back to slide 18, if I might. So can you just summarize high level, like what are the mitigations that we will employ in order to, for instance, avoid adverse selection, which, you know, it sounded almost like you're just watching for it on afterward, not trying to address that up front, but maybe I misunderstood.
No, I'll show you.
Okay.
I'll provide examples of through the process that you see what we're trying to look for.
Okay, very good.
So we talked about the potential benefits. The second bullet shows just how different the returns could be between paying fees and not paying fees, because they're getting a performance kicker. And when some of these are earning double-digit returns, it can be pretty significant. I'll get it. I promise I will get to it. Here are different ways to implement it, and City of Fresno is doing 2 of them. This touches on Chad's comments earlier about how the co-investments that are in the Asia Alternatives separate account aren't part of the special co-investment policy. So fund to funds, in certain cases, will offer co-investments as part of the overall approach as a way to lower the fees. Both of your fund to fund managers, both Pantheon and multiple Pantheon deals and now Asia Alternatives, have included co-investments as a portion of it, as a way to lower the overall fees and therefore boost the returns. It's possible to develop specific sub funds when you're doing something directly with a single manager. We haven't done that. There's multiple general partner co-investment funds that are fundraising all the time, and the manager is just doing co-investments on behalf of their investors. Other plans invest with those, so you're not avoiding all the fees, but you generally are getting a smaller fee from these managers. We're not doing that here because instead we've developed our direct approach, avoiding all the fees entirely and focusing on doing co-investments only with the specific managers that we know best that we have this program. So our policy has listed its objectives, its evaluation criteria, and the process we go through for it. So I tried to sum up everything that's in the policy. I hope I did an effective job. Here we start getting into what is the process that we're using to help try to avoid those adverse manager selections. We're partnering with high conviction managers. We're not immediately doing co-investments. We're building a relationship so that we maximize or increase our ability to understand what they're good at, as well as give them a chance to understand our process and what we're looking for in our co-investments. And then there's the strike zone analysis is sort of what we're talking about, where we're trying to focus on certain things, the framework we're using, the legal and compliance work that is done for the co-investments when it's appropriate for these processes. So here's the strike zone. We look at what the general partner is good at across a lot of metrics. There's published research identifying these specific areas about being signs that you increase your likelihood of outperforming. So we're aiming to make sure that the deals that are being offered to us are as similar as possible to what they've been successful in the past and matches the skill sets that we've identified with those managers. So these are some of the examples of what we look for. And if there are differences between the deal that's being offered versus what we know about those managers, that's a red that's a red mark and makes it that much less likely for us to do it. It doesn't take much for us to turn it down because we know, like all private markets investments, once you're in it, it's really hard and expensive to get out of it. So we're trying to find those limited few that satisfy as much as possible these areas. Anything else you want to add to at this point?
I think, yeah, we've definitely turned down quite a few. And there's one clear example, who shall remain nameless, that it was pretty obvious very quickly that they were trying to close out their last fund and wanted to sell something it didn't fit what we were trying to do. So after multiple polls, just thanked them very much and passed. So no, it's got to be very positive, very high conviction, very good managers, and fit alongside with what we want to do and what the policy allows us to do before we'll step off that plane.
So when we look at a deal, and it could be an opportunity of a real estate project or a specific company investment or investing alongside a fund of funds manager in a particular private market manager. One of those, the real estate, is ones you've done in the past, and the other two are the ones you heard earlier today. We aren't experts in these hybrid helicopter autonomous vehicles, but we know a lot about the manager and what their skill set is. And so we're trying to focus on, let's make sure we use what we are good at, which is understanding our managers, and use that to focus on this strike zone approach. We do evaluate the deal specifics that they're looking at, just making sure, is there anything in there that doesn't sort of pass the spell test? Case of real estate, we'll look at some of these assumptions and compare it, ask them for additional data, or ask the NAPC research team, or use all sorts of third-party sources to say, is this market really as attractive as they're saying it is? What are similar projects that have been elsewhere? I mean, those are the kind of approaches and analyses that your investment staff is working with. So that's it. Co-investing is growing. It's in demand. We've built an approach that leads into your investment staff and consultant skill set. The objective to avoid fees, as well as build stronger relationships and understanding with our managers. But most importantly, I'd say fees is worthwhile and significant enough to be potentially additive to the total plan's performance. And we're trying to do it in a way that is not too time consuming, given all the other things that your staff is working on. And then finally, you're going to be getting reports. You're going to get the reports as the deals are done, and then you're getting an annual overall report on all the co-investments and how they progressed over time. Thank you.
I have a couple questions.
Yes.
On your Yoda slide, I definitely support that, the cycle. It looks like you're trying to visualize for us here, help us visualize, and to trust the process. I'm also in, generally speaking, trust but verify. And so what will be the evaluation criteria and or analysis completed after those investments are made?
Well, typically, for a lot of our managers, I have quarterly calls with them, and these will be part of that conversation. So we will have somewhat real-time updates on them, fully understanding that there are lags associated with in general. But we can drill into these assets and these funds and whatever else as deeply as we want. And for the board level, it's the annual review of the entire co-investment program and all the co-investments, as well as they and their impact are also reflected in the quarterly reports, but not to the extent of the same amount of detail that the dedicated co-investment report will be shown. So that will have performance figures in it as well as
that we can compare to the other aspects in order to be able to make the determination of whether or not we have been, our cycle or our approach is successful, right? And that we've avoided some of those other risks. That's what I just want to make sure that whatever that reporting level comes to the board, that those items are taken into consideration.
Yeah. Well, before also, I forgot to mention, before the policy was originally proposed years ago, I spoke to several former colleagues of mine that have way more experience in co-investments in private markets than I did at the time, and tried to understand their approach to co-investments. And so a lot of that is applied in our policy itself. So it's not like I just threw something together, ChatGPT, not that I've used it. Thought existed back then, so just kind of put together a generic policy. I tried to be as thoughtful as possible with input from everybody, so we're all on the same page. So that's kind of how we've arrived at where we are today.
Yeah, I think it's actually very comprehensive and thoughtful. And just when we identify risks on the front end, how do we evaluate our performances associated with those risks on the back end? That's, and if during our annual review and reporting, we'll have that, very clearly spelled out, or we can maybe, just address the risks from that perspective at the time that we discuss it. I'm fine. I just don't want to say, okay, well, these are the risks and we'll, try to mitigate them, and then just say, okay, here's the performance, without having a nod to, hey, this is how we performed as associated with those risks that we warned you about. So I think it's covered. Thank you.
Looking for a motion. Accept the recommendation.
To approve the possible action on the co-investment on the program to approve the program. Okay, I got it.
Yeah.
I'll move.
I'll second.
We have a motion and a second. All those in favor?
Aye.
Aye, and it passes unanimously on the employee side. Everybody, same motion? French will make that motion.
Second. Roll call, Len?
Aye.
Larry? Aye.
Rob? Aye. And with my vote, the motion passes unanimously. Once again, great job, guys.
Thank you.
Thank you.
Moving on to board initiative item number 3, discuss and approve private equity pacing plan.
That's NEPC presentation yet again. So every year for each private market asset class, we're developing pacing plans. We're aiming for a certain percent of your portfolio, but it's harder to make adjustments on the fly relative to a stock investment or a bond investment because they're illiquid and they take time. These pacing plans evaluate where we are, all the commitments we've made already that could still be drawn down at unexpected times, and then where we're going, where we're trying to get. And because there's investment variability in both the numerator and the denominator, we revisit it every year and update it based on the most recent numbers available. I also provided some education about private equity market, but we're putting the pacing plan first. That's the agenda item. And then I'll talk about what's optionally available depending on how much time we have and your interest in 2 other areas, which is sort of a broader overview over what is private equity and how does it functionally work, and then some sort of quick hits on what are the key items that are impacting the private equity market, both buyouts as well as venture capital, which are sort of the 2 key areas. Buying out established cash flow generating companies, usually with debt, or making investments in new businesses that aren't cash flow generating without debt, in most cases, in the hopes that some of them will make up so much money that the ones that fail will be more than offset. So those are the 2 types of private equity. And you have investments in both. So let me make this screen bigger. And here's what I described. Every year we're reevaluating. Our recommendation each year is approximately how much should be committed over the next year. And we're recommending making approximately $40 million in new private equity commitments. And I'll show you why. So let's start with what you own. Here is your dollar weighted exposure in money that's in the ground. And there we categorize each of the investments either as overall private equity, co-investments, fund of funds, secondary private equity, or direct venture capital, which you can see is a very small sliver. Over time, we'd like to see that grow a little bit, but it is the riskiest, so we're being very careful and thoughtful. You'll see more of that venture capital as part of this overall sort of diversified funds, but it's showing you have a wide mix. Down here, you still have significant unfunded commitments. So you've made over $300 million in private equity commitments, and $140 million has not yet been called. Some of that may never be called. So if a fund manager has a finite life fund and they're buying companies, they often, if they're smart, will not call all the capital that the investors have committed to it, because later on in the life of that fund, a company may need a little bit of extra capital. They may need some growth capital. It's a great opportunity. There may be a short-term issue. You need to reinvest in something. And if they haven't reserved that a little bit of additional capital to put in, they're going to have to go elsewhere to find it. And sometimes that outside capital can be really expensive. So a lot of times you commit $100, they might only end up calling $90, $95. But still, you can see there's still some significant amounts of unfunded commitments. So we have to keep that in mind as we think about the current pacing. You've made in the last year or two, you've made two significant multi-year commitments to major fund of funds. One to Pantheon, where you did the third round of fund of fund commitments to Pantheon, which has been a great partner for this plan over a long period of time, and then also to Asia Alternatives. So both of those are going to be playing out over the next few years, where they're making commitments on our behalf in various areas. That's why we're modeling a smaller amount now, and then as those major multi-year commitments play out, on average, we'd be expecting more in out years in terms of commitments. We didn't work too closely on, whether it would be exactly before or after March 2029 when that next major commitment, if there is one, would come. In general, we try not to focus too much on years 2, 3, 4, 5, 6, 7, 8. It's next year. But we use the rest of analysis to make sure that if everything played out on average, we'd be really close to where our long-term plan is. And then we also do, not shown here, but we also are thinking about, as we're modeling, what's the extreme measures, and want to make sure we're keeping that in mind in terms of liquidity guardrails that we're overall monitoring and making sure that you're in a good place, which you are in terms of your investment program.
And remind me how often we review the levels here on an annual basis when we look at this.
Yeah, so it's a different time each year for each asset class, but it's once a year. Yeah.
So you'll be back to us next year around this time regarding the private equity.
That's right.
Okay.
So here's another way to visualize the data we had, because a lot of these managers report on a lag. We were using March 2026 data for all of these managers, and we were comparing it to the same value of the fund. That's the most recent time where the fund has also been valued. You had made upwards of 800 million approximately in commitments, and about half of it has been called. That's the light blue. The dark blue is the part that is money in the ground at work for you. And the light blue is you made commitments that haven't been called. Over time, the light blue becomes dark blue. So you can see the light blue shrinking, but we show it as never actually going all the way away. Even after you have the investment period, we're still modeling that it's there because of managers that aren't calling some of that a little bit of additional capital. But the rest of the light blue became dark blue, and then the dark blue eventually is redeemed back to you, or lost if those cases where they had a bad deal. But the majority of it, actually, what we're aiming for is more than what you put in to come back to you. I was trying to be overly accurate. I apologize for that.
Retiring.
Yeah, thanks. I'm sorry. So you can see the amount of money you have in will, over a significant number of years, eventually be redeemed back. What you need to do is to keep the program where we're aiming for is to make new commitments. That is the green. So it starts a little bit per year. and grows over time to be more significant. And then as the green gets called, we start seeing the medium blue is where future commitments get called and get invested over time. So this is a very long-term process. And it's why we look at it each year as we're course correcting based on everything that happened to your investments and to the financial markets overall. We are showing and modeling cash flows. Our modeling system tries to be very conservative and assumes that uncalled capital gets called really rapidly. So it often models a lot being called in that first year. So the fact that the light blue line is below the horizontal, it's assuming that you're going to get a lot of capital calls in this year. But very rapidly, we're seeing that this is a mature program. You're at your 8% target, and we expect in general it to be cash flow positive for your portfolio over time. You'll be getting more money back than you're putting in on average. Not that won't always be true every month or even every quarter, but in general, unless you have some exceptional gyrations in the financial markets, this is a program that should be generating more cash that you can then reinvest elsewhere.
Thank goodness those financial market gyrations never occur.
So that is your program and our recommendation to commit approximately $40 million in the coming year. And then I have some information about private equity, and I have some additional sort of topical updates about private buyouts and venture capital. Given everything else you're covering, how much does the board want me to sort of start with private equity 101 or to jump ahead and give you sort of market update, or neither?
Market update.
Yeah. Okay. So let's jump ahead.
But thank you for including this.
Yeah, I think it'll be, if any of you looking through the material, or as you have looked through the material, if you have any questions, please contact them. No, I mean, contact me. Please, I'd be glad to talk. So buyouts, the three key things we're thinking about. Credit markets are active because buyouts rely on borrowing money to do the deal. We're finding a lot of opportunities, a lot of easy flow of capital. So private equity managers are, although interest rates are higher than they were a few years ago, there's a lot of options. And so it's they should be able to put deals together. When the credit markets close because of something significant that's happening, it makes it a lot harder for private equity managers to do deals because they rely on that credit. But we're in a good environment for credit. Deal flow, there's a wide range of different valuations. Things that are in high demand, there's a lot of potential buyers. Things that aren't in demand, there's a lot of very, very cheaply valued assets. So if you have a skilled manager that can identify the diamonds in the rough, they can buy it cheaper in this type of environment where you have a few winners and a lot of less winners. And then finally, we're slowly seeing a recovery in that transaction rate I touched on earlier, where there were fewer less cash flows coming back. We are seeing that tick up, but slowly. One major way that you see both buyout and venture capital deals be realized is through the IPO market, new publicly traded companies. For a long time, we didn't have a lot of IPOs. Now we have some mega IPOs. A lot of these are benefiting some venture capital investors, from SpaceX to the potential for Anthropic and other AI-related things. Likewise, we're seeing transactions with companies buying other companies from private equity managers. They also have ready access to that credit, and so we're starting to see that open up. This is good news overall for the portfolio. Venture, I touched on venture earlier with SpaceX, but liquidity channels, IPO windows opening for the big names, more M&A activity. These are good signs. We are in a situation where we're still dealing with a lot of companies that are in current portfolios that maybe were paid, money was paid too high. And so we might still see some losses being realized over time. But we've been very careful trying to make sure
that we're with good managers that have done better than some peers, avoided those sorts of things and can take advantage of everything that's happening right now and good investments going forward. And that's it. The rest of that is sort of metrics. So that is the end of my prepared comments. Any questions?
Can we get a motion to approve?
I'll make the motion to approve Marvell.
I'll second.
First and second on the employee side, all those in favor?
Aye.
Aye. Passes unanimously.
And Rob Beckwith had to step out, so we have still a quorum.
Yes.
Perfect. So Byron, please say motion.
French will make the motion to approve the equity piece.
Then a second.
Roll call, Lynn?
Aye.
Eric? Aye. And with my vote, passes unanimously. Once again, hit it out of the park, guys. Thank you. Appreciate you.
Yeah. Moving on to the general discussion.
I can't pawn this one off of anybody else. Okay, me. First, apologies. I did not get back off vacation in time to file the report, so this is the same one, but it's verbal updates from last one. The Chiefers newsletter will go out this month. The drop cost saving, neutrality enhancements, et cetera. We actually met with the city manager, and she said she would have her city's actuaries craft better questions for Siegel. So hopefully we can get some traction on that and get something moving. New positions, I believe it was already questioned several times, but 3 positions are approved. 2 of them are in process heavily. One's close to being in process, and the deputy CIO position is still frozen at the city level. RFP for investment counsel, we've started getting various questions, most of which are unfortunately, we're a securities litigation firm. Can we please apply for your general investment counsel position, which is not good. So we told them, thank you very much, but that doesn't quite qualify. More on that as times come up. The rest of everything has already been fairly well covered. General building updates, we're still holding for certification of the solar panel installation, and we're still holding for city approval of the dumpster removal. Are there any questions? Very much.
Some action of the draft ordinance pending before the city.
So as you know, this is a standing item. Rob gave you a brief update of those ordinances that deal with drop cost neutrality. There's also a couple of other ordinances, and I'm not aware, including one that's a requirement to maintain our tax qualified status. These are significant.
City manager did not address anything other than drop.
So we've been having this on the agenda, I don't know, 6 months, 9 months, 12 months, years. We're not in trouble yet, but seems we haven't figured out a way to get movement. This is one, an unfortunate one that I take with respect to the legal dimensions of it, I will have to pass on to.
Ask a question? So I think I just heard Rob say, I'm sorry, I had to step out just to toss my trash. Did you say that the city manager did not discuss anything other than drop?
The drop ordinance proposals, yes.
The drop ordinance proposals. So did you not, when you were in the meeting with her, you didn't bring up the other items?
We did.
Oh, you did? Okay, so I must have misunderstood your comment.
No, she only discussed the drop ones.
So when you brought the other ones up, what was the discussion on her side?
I can't remember specific words, but no basic discussion. She went back to the drop questions and stated that the Siegel responses trying to answer questions were confusing, that she was going to have the city's actuary craft better questions.
Okay.
Or something to that effect.
Okay.
Can I add to that? Because that was a meeting we attended. There were 6 items, I believe, that we took to the city manager. And the one about the tax implications, I was under the impression that she felt that one would be a little easier to move forward because it didn't deal with actuaries and the desire to get better information from.
That was actuary actual meetings.
And she also indicated that due to the budget and the fiscal year cycle, it would probably be after the fiscal year before they started gaining traction and working on it again.
So Larry, were those conversations prior to the meeting or were they in the email or?
As I remember, that was in the meeting.
Okay.
Yeah, it seems like if you brought it up, she should have addressed it in some way, not just ignored it. But I would think as well that since after now all that budget hullabaloo is over, that they would be able to move forward on the non-job related issues. And so, I mean, I'm happy to put in another inquiry because I think that's super important.
And there might have been of the 6, wasn't one already taken care of?
There was one that was dropped because we originally had 7 items. That was change in the fidelity contract, which was taken care of multiple years ago. The required minimum distribution language, which is what Russ was talking about with the tax qualification, needs addressed. As I recall, that was discussed by email prior to the meeting. And then we moved on to drop during the meeting. So.
Get on to report by legal counsel and legal actions.
You notice there isn't the usual one there, partly because I think I was anticipating the action that boards took earlier with respect to the transition, and I'll work with Ashley to prepare a transition memo to the boards.
Moving on to E, information only items. EPC private markets benchmark transition from Cambridge Associates to MSCI.
So, because the primary benchmarks for your private markets are often a public market plus some premium, because we have a long-term expectation the private market should outperform. We've added secondary benchmarks that we think will zig and zag more accurately. We looked at peer groups and we compare your private market performance versus these peer groups. We've been using Cambridge Associates, but NEPC has elected to negotiate a deal with MSCI where we have access to their larger, more detailed, more extensive peer groups. So these are better peer groups. But it required some hard work on our part in order to allow you to have access to it. And part of the negotiations to make sure that reporting in these meetings doesn't mean that MCI is going to ask you for a check. That's sort of. So these are better benchmarks, better, more detailed peer reviews, and in general, slightly more global than the Cambridge Associates ones, which are highly U.S. centric. And since our approach in general is to be slightly more global as well, I think, again, the better. These are secondary benchmarks. You'll start seeing them in your reporting with the second quarter, actually. I think the way that we phrased it was awkward. We said for reports created after July 1st. So that means the June 30th presentation. That's it. Informational. There's additional questions. And talk about it, but we've did a lot of work on this, provided a lot of information to your investment staff about the differences between these groups.
So is it fair to say that the MSCI is more appropriate from a benchmarking, like their approach and their portfolio, if you will, for a public entity versus Cambridge being more focused on the private side? Or how did you come to the conclusion that MSCI would be more appropriate for us?
We counted noses, so they have larger, more detailed groups. Secondly, Cambridge asks managers to submit performance information. So if a manager decides, gee, this was a bad quarter, I don't want to submit it, that's sort of what happens. Whereas MSCI asks investors to share information. They do it in a way where confidentiality is preserved and all these sorts of things, making sure the manager knows when a investor is sharing this information. But you're a lot less likely to get bad news hidden and to get more continued information. It's also very representative of the types of investments that other institutional investors, such like yourself, have made commitments.
Very good. Thank you.
Well, just to clarify, is this the agenda item states these are backup secondary benchmarks. They are not the policy benchmarks that we are going to be reporting from Northern Trust.
If they had been, we would have been seeking a vote of approval from you. But because these are just this is additional stuff that we provide in our performance report, we as a group collectively thought this could be an informational item.
Great.
No. Thank you. And moving on to F, propose agenda items for next board meeting. Have any?
I actually have one. This is Lynn.
Can we
put in the agenda discussion on the effectiveness and value of ad hoc committees in relation to this board, please?
Got that? Thank you, Lynn.
And I don't mean to harp on the stipend thing, but where are we with that? Because I thought we were doing some, we had some other information.
The policy that you adopted went into effect July 1st, which
Right.
was increased.
But then something came last time and said something about other places, and we're going to research it.
I started to share that information. And I shared it with the Saltzman, I shared it with Nossaman. Both reactions were, but that only applies to counties.
Oh, that's fine. I just thought you would come back and tell us.
Sure. I haven't really had a chance to follow up with them. I apologize.
Okay, no, that's fine.
And what I would like to do is work with them to say, is there anything that we can do to propose for a change in what we currently do? Because of the allowabilities for that. But right now, the initial reaction was no, what legislation was talking about was only applicable directly to counties.
Okay.
So no really further reaction.
Just curious for the answer. I was just waiting for the final answer. We were going to look at something. Okay, that's fine.
I don't know, into unscheduled oral communications. Just once again. Go ahead, Lynn.
Again. Sorry.
Oh.
One last thing. Circling back to what Russ had said, is there a way, is it possible we can share with the rest of the board the responses to the RFP that we got both from Saltzman Johnson and Nossaman?
Yes.
Is that a problem?
Yes. Well, they're both public records. I have them electronically. I can be happy to share it if that's your direction.
I would like that so they can see those as well. So they realize how transparent we are being. That's all. I'll keep quiet now.
Okay, moving on to H, any public comments? And seeing none. Any employee personnel issues? None. And move into closed session.
We're now going into closed session with respect to item J1 on the agenda.
Yeah, it's okay. Sure.
That's not probably the question asked.
Yes, she does.
Oh, you already have it ready to go? Yes. Let's check. Okay.
Mr. Chairman, you're in open session. Chairman's are open session.
Okay, was attorney from closed session. Report from council.
Yes, this is the report out of closed session. Each board took reportable action with respect to the joint $30 million commitment to Artemis Real Estate Partners Fund 5. Each board, by unanimous vote of the board members present, accepted the legal review and the operational due diligence report, one element of which included a background investigation. The boards also reviewed the $30 million commitment to Artemis Real Estate Healthcare Partners 3, and each board, by unanimous vote of the board members present, accepted the legal review and the operational due diligence review, including a background component of that due diligence review. That constitutes the report out of closed session on item J1.
Thank you. And moving on to item J2, we will go back into closed session, please. We just did this.
Yeah.
Let's say compliments.
Definitely.
Yeah.
You're in open session, Mr. Chairman.
Okay, section. Yeah. That's council, please swear out.
We're now in open session. This constitutes the report out of closed session with respect to item J2 on the agenda. Both boards, by unanimous vote of all members present, voted to transfer the $50 million commitment from Hines Asia Real Estate Partners to Hines Asia Property Partners. I get that right?
Subject to legal operation.
I apologize. Yes, subject to legal review and operational due diligence. That constitutes the report out of closed session.
Very much. And we're looking to go.
And now I'm sorry.
Go ahead.
No, I was going to say the same thing you are. We're going to go into closed session with respect to item J3 on the agenda. Sorry.
And I will recuse myself.
And well, before, and I don't know, I'm supposed to ask that, well, you'll be gone, and then, but I've never heard why you recused yourself. It's always curious.
It's frankly, it's out of an abundance of caution. I don't believe that there's an actual conflict, but there was a concern that was raised by a board member that there was a perceived conflict, and I wanted to honor that perception, and so I talked to Russ about it, and I recused myself not only from any closed session discussions for this board, but I'm also recused of any conversations about this matter at the city as well, just as an abundance of caution. So
Awesome. That's what I thought, but I just moved for too long. I needed that.
thank
I
you.
appreciate it. Thank you.
Perfect. You got Wednesday.
Gosh, Ashley, you don't get home until 8 o'clock.
Oh, it is? Wait, oh, yeah.
Or later.
They do at 9.
Taking the train now too? You guys doing it?
Oh, I'm driving.
Trustee Quinto, and I'll be right back.
Train bailed out on me, not only last night, but the last time I came here. I've given everybody credit. They just, no,
They just don't show up?
the last one is supposed to arrive at 6, and they do a half-baked job trying to keep you updated. It finally arrived at midnight. Not particularly helpful. But last night, I don't know when it finally, they said it was supposed to leave at 6:07. They updated, it said 7:01, 7:10, nope, nothing, and no update. So you don't know what's gonna happen, so I drive.
And no high-speed rail yet, huh?
Yeah.
Very good. Open session, Mr. Chairman.
The report out of closed session with respect to item J3 on the agenda is that the boards did not take any reportable action. That constitutes the report.
Thank you, council. With that, this meeting is adjourned. Thank you.